this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning and welcome to Bloomberg Intelligence. I'm Lisa Mateo. Paul Sweeney has the day off. It is the summer Fridays. He's got a new puppy, so he's relaxing at home. I've got Emily Garfeo right by my side. Thank you for joining me this morning.
Of course.
Excited? The ladies ruling things here? Okay, here we go. Some big news, right, Emily? Chevron Hess deal going through. Coming up, Bloomberg Sonali Bosick, Danny Berger. They're going to be speaking with Chevron CEO Mike Wirth, so stay tuned in a few moments for that. We also have Drew Redding, Bloomberg Intelligence, U.S. home building analyst. We have housing starts, those figures coming out. And Geetha Ranganathan, Bloomberg Intelligence analyst on Netflix earnings because the shares are down, so we're going to find out. All right, but first we have to get a Bloomberg Business Flash. Mr. Charlie Pellet, take it away.
Hi, thank you very much. Welcome on board. We got Netflix down now by 4.1%. This Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. index equity options, equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. A solid start to the earnings season, fueling gains in stocks. Fed Governor Christopher Waller says worries about hiring in the private sector have driven his call for the central bank to cut rates this month. Waller made the comment in a wide-ranging interview aired right here on Bloomberg Radio.
You know, if you're walking on a lake and the ice is frozen and it sounds safe, but when you start hearing cracks, and that's what I feel like, it's too late once you go through the ice. So you've got to start prepping in advance before you have that happen.
And in that interview, Waller was also asked if he'd take the job as Fed chair.
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so that's it.
And right now we do have the S&P 500 index advancing another 13 at a record up 0.2%. The Dow down 52, down 0.1. NASDAQ up 0.2%. 10-year 4.41%. Gold up 0.5%. Crude up another 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you very much, Charlie. Okay, so we were just talking about before Chevron. They won this arbitration battle with Exxon. It closed a $53 billion deal.
Now, our Bloomberg television and radio listeners. Of course, we've heard this morning that Chevron has closed on its $53 billion deal to buy Hess, and that is 20 months after the takeover was first announced. We are now joined by Mike Wirth, Chevron chairman and CEO, and you must be so relieved. This has been a long path to getting here. Your stock has really felt that time pressure as well. How do you feel now that the deal is done and what it could mean for shareholders moving forward?
Well, we're pleased with the decision that came out of the arbitration panel this morning. We're also pleased with the decision that came out of the FTC yesterday regarding John Hess's eligibility to serve on Chevron's board. And this really helps create a premier international oil and gas company. We are one of the largest producers in the world. We've got the highest cash margin in our upstream business of anybody. We're one of the largest producers of both oil and gas in the United States, largest leaseholder in the deepwater Gulf of America, and have industry-leading free cash flow over not just the next couple of years, but out into the next decade now as we combine with Hess. So it's good for us. It's also good for our industry because this was a transaction that kind of, as you say, impacted, I think, our investors, the uncertainty, and it hung over the industry a bit because the question about what would it mean for potential future transactions is one that people were paying close attention to. And so I think having that resolved and affirming the industry practice that asset level rights of first refusal don't apply in a corporate level M&A transaction is one that's going to be very important for our industry.
I mean, Mike, one of the other reasons this industry couldn't keep its eyes off this case is because you had two giants, you and Exxon, really battling this out. But it doesn't end there. Shonali and I have been discussing it this morning. Now you have to work with Exxon. You have a JV in Guyana after this. How is that relationship going to be moving forward after this case?
Well, we work with people all around the world. Our industry is built on partnership because the scale of our investments usually requires partners to help share risk. We also pool technical resources in order to develop some of these challenging opportunities. And so partnering is very familiar to us. It's a core value. We put great pride in our ability to be a good partner around the world. We work with Exxon and other places around the world and have for many years. In Guyana in particular, most of the people that will be involved in this are going to be legacy Hess employees who've got years and years of history working together with CNOOC and Exxon on this project. There are good working relationships at that level, and all three companies have worked together to create the incredible value that is seen in Guyana and the prospects for the future. So I expect that those relationships will continue to be good.
But up till this point, there was a little bit of acrimony here in the pursuit of Hess when it comes to Guyana. When was the last time you talked to Darren Woods? And what can you tell us about the relationship that both of you are building in result of this JV?
Well, you know, we see each other at industry functions and the like, and so we speak from time to time. But this has been a sharp difference of opinion. We believe that a plain reading of this contract, which is a confidential document, was very clearly, as I described earlier, that a right of first refusal would exist if there were a transaction at the asset level, but not at the corporate level. The arbitration panel has affirmed that interpretation, and so we'll move forward from here. But look, it didn't have to take this long. I wish it would have gone differently. We tried early on to find a way to resolve this and thought we were working together in good faith, and then abruptly were notified that the other parties had decided they wanted to resolve this through arbitration. At that point, you know, we believed we had the right side of this argument. We had to stand up for that, and that's taken some time.
Well, you mentioned the other win you had very recently was the FTC allowing you to put Hess onto the board. Is this a much more easier regulatory environment for you to be operating in right now?
Well, there's certainly been a change in you know, the mood, and I think in the policy that we've seen with the Trump administration. This is an administration that wants to use energy as a competitive advantage for our economy, which it is. Our country is blessed with an abundance of energy resources of all types, and it's not just oil and gas. It's solar, it's wind, it's coal, and you can go on. The agricultural resources that contribute to renewable fuels. And this is an administration that wants to use those for the benefit of the American economy, for the benefit of the American consumer, and that's proud of the American energy industry. And I think that's a welcome change for our economy. It's certainly a welcome change for those of us that operate in this industry and are committed to the U.S. And so I think it's very, very positive.
You mentioned a little earlier that it removes a lot of uncertainty when it comes to mergers and acquisitions. How do you think that this will change the competitive positioning of the industry through the remainder of the year into next year as many of your rivals, your partners, reconsider what their footprint should look like?
That's hard to predict. That's kind of a hypothetical. I can't really speak on behalf of others. But I do think that the clarity that contracts that are written to govern these ventures that we go into are ones that will not be used to peel assets out of a corporate level transaction is an important signal for our industry. We have companies that come into this industry, people who take risk and build companies from nothing. They grow them. Oftentimes the way that they get rewarded for that is by selling that company. And so it's the nature of our industry that transactions are part and parcel of how it functions, and something that might change the historic practice creates some uncertainty. And so I think with that uncertainty resolved here, you do have more confidence for people going forward.
This is also coming as you've been undertaking some restructuring efforts too. So with this deal under the belt, do you look at your oil and gas portfolio and say this is sorted now, or are there other areas that you're still looking to add on to?
Well, you're always looking to improve your asset base, and it's a depletion business. Every day we produce, and those barrels can't be produced again, and so you have to replace them over time. It's also a business that's very capital intensive, and so you need to be efficient. Margins are thin. Prices over time, really, if you look at it and inflation adjust, prices haven't changed much for decades. There's volatility along the way, but the industry uses technology and efficiency to continue to keep the cost of energy very affordable as an input to the economy. Those things haven't changed, and I think all of us in this industry continually look for ways to improve the productivity of our assets and the efficiency of our operations.
So speaking of affordability, it's interesting because on one hand, when you have oil prices below, this is WTI, below $70, last year around this time we were above 80. How does that change the calculus for how you want to address the industry? Remember, in the onset of the Trump administration, this was a market perception that drill baby drill would be the three words that define this year, but that's hard to see with this type of suppression of oil prices.
Well, we respond to market signals. Our company lays out a program. We invest for the long term based on a long-term view of prices. What prices do in any short period of time can influence the cash flow of the company and the short-term financial results. but they don't have a material impact on our longer-term plans because we develop assets over a period of years and often decades, and their lifespans are oftentimes many decades. So we take a long-term view on supply, demand, technology, competition, and price to set our capital spending plans, and they really don't, absent an event like COVID, where you see a dramatic contraction and a lot of uncertainty, we tend not to move our investment plans around over shorter-term movements in commodity prices.
Mike, we're weeks away from earnings season, and on the heels of a deal finally closing, Mike Wirth, Chairman and CEO of Chevron, really a new day for the oil industry here. We'll be keeping an eye on how it plays out. Let's get a look.
All right, that was Bloomberg Sonali Bostic and Danny Berger speaking with Chevron CEO Mike Wirth. So let's dig a little bit deeper into this. Who better to do that with than Vincent Piazza? He's Bloomberg Intelligence Senior Equity Research Analyst, Oil and Gas. Vincent, I know you were listening attentively to that conversation. What was your biggest takeaway from it?
The easy part is over. 20 months waiting for this transaction to close. I don't really think it was much in dispute. I think what we all have said, and even on this show, I've said it in the past, that it's very difficult to set a precedent like this to suggest that a JV on an asset would hold up a corporate deal. So glad to see that that viewpoint has been vindicated and that we can push forward. But for Chevron, the easy part is over. Now it's integrating a rather substantial acquisition into the broader makeup of what is a very large entity with many tentacles. And so if you break it down, the key asset is obviously Guyana, right? But there's also assets that support the cash flow, and that is the Bakken. What do you do with the Bakken? The Bakken is a maturing asset. And an asset that isn't likely to grow much because of its limited footprint in the region. So the cash flow there has been used to help fund the Guyana development. It's a large resource. It needs to eat up a lot of cash, a lot of capital. So do we continue down with that path? I think that is a key consideration for them. The larger entity now has a larger balance sheet. And so it may not need the broader volume from that Bakken asset, but there's also other aspects that Bakken asset. There's a midstream piece that is tied to that. What do you do with that? So lots of decisions that need to be made over the next, call it year or so. It's been delayed 20 months. So, you've been put on hold for 2 years. Your long-range capital planning has been put on hold for 2 years. But now it seems that this piece of the pie improves the profile of the company significantly.
Hey, so one of the things that the Chevron CEO said today in our Bloomberg TV interview is that closing the Hess deal is also good for the oil industry at large. And I'm curious what you make of that statement and whether you agree that this is good for the oil industry.
Well, think about it. You have a much larger balance sheet, willing and able to deploy capital across a broader spectrum of assets. So, Hess was a smaller enterprise. In a way, it was somewhat capital constrained, not to the same level of on relative basis to Chevron. Chevron has more heft to put behind the asset and more capital to put behind the asset. This isn't the end to the developments for Guyana. There's much more exploration, delineation, development that is likely to occur. It is a wonderful resource, probably one of the most prolific and potentially lucrative offshore development that we've seen in many years. So it is good for the oil industry insofar as it provides an additional mechanism for volume to come into the global energy value chain.
Now, Vince, in the last 30 seconds or so we have left, you mentioned the oil industry. So big oil in itself, isn't this where companies usually partner together, to help minimize risk, share costs, things like that?
Yeah, it is. And this is what the industry is built on. And that's why we always felt that this arbitration, this case was somewhat dubious, because if you shut down this acquisition, you call into question the framework of many deals across the global energy value chain.
All right, that's Vincent Piazza, Bloomberg Intelligence Senior Equity Research Analyst, Oil and Gas. Thanks so much for your insight on that. Coming up, we've got a lot coming up. We'll start with Julie Beal. She's Chief Market Strategist, Portfolio Manager, Kane Anderson and Rudnick. She's going to talk about the outlook for the markets. We had a lot of company earnings today. What does that mean? Then we'll talk with Drew Redding, Bloomberg Intelligence U.S. Home Building Analyst. We did get some data in. Housing starts rebounded in June. Apartment construction, a big part of that. So Drew's going to break that all down for us. So stick around. We've got a lot more coming up. I'm Lisa Mateo alongside Emily Grafeo. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ both higher. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. We begin with a developing story headline right off the Bloomberg. Humana falling after losing a bid to reverse Medicare bonus cuts, down by 3.6%. Stocks wavering near records. Traders parsing a handful of earnings this morning. S&P swinging between gains and losses, up now by 1 point. Little change there. 62.99. Could see another record close today to wrap up the trading week. The Dow down 136, drop there of 0.3%. NASDAQ down 2 points. Little change there. 10-year 4.43%, the 2-year 3.87%, the 30 4.99%. Spot gold up 0.4%. West Texas Intermediate crude up 1.5%, 68.55 a barrel. This on a day when Chevron won its arbitration battle with ExxonMobil and closed its $53 billion deal to buy Hess Corp. Chevron CEO Mike Wirth was on Bloomberg Radio moments ago talking about the deal.
Well, we're pleased with the decision that came out of the arbitration panel this morning. We're also pleased with the decision that came out of the FTC yesterday regarding John Hess's eligibility to serve on Chevron's board. And this really helps create a premier international oil and gas company.
Chevron CEO Mike Wirth interviewed moments ago here on Bloomberg Radio. Among the companies out with earnings today, among the financials, American Express down 3.7%, Schwab up 3.5%, and checking Ally Financial down 3.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you very much, Charlie. This is Bloomberg Surveillance. I'm Lisa Mateo alongside Emily Graffeo, and we've had some upbeat earnings, some good guidance from some major companies. We've had more economic data. So what does all this mean for the markets? Here to tell us more about that is Julie Beal. She's Chief Market Strategist, Portfolio Manager at Kane Anderson Rudnick. Julie, thank you for joining us this morning. Want to start with earnings, so let's go there. Not bad. A lot of these, though, were tariff-sensitive companies. So what does that kind of tell you?
I think that right now what we're seeing is that companies are not 100% sure how tariffs are going to impact them because they don't 100% know what the tariffs are going to be. And so they're in a really difficult position where they're trying to plan their businesses to have the most amount of flexibility to adapt to whatever comes out, right? Corporate America does a wonderful job of being able to be clever and adapt and figure things out. And what's toughest for them right now is that they just don't have clarity on what the rules are going to be. But I also think there's a recognition, kind of in line with the taco trade, look, let's not assume the worst. Let's try to assume that things will come to a more reasonable level and that we can figure this out and sort this out. So there is a calmer tone that I find, but still an unwillingness to really commit to very, very specific supply chain initiatives because we just don't know.
Yeah, Julie, that calmer tone is really interesting when you look at just the performance of the S&P 500 since Liberation Day. And I'm wondering why you think the rally has been so strong. If a lot of the tariff deals that have been announced so far, thinking Japan, South Korea, are basically the same levels that Trump had initially announced back in April when the market had panicked so much, how do you explain kind of that market resiliency here?
Yeah, I think that's what's kind of a little bit difficult for me is that what I struggle with is thinking about the risk that some of these tariffs are enacted, right? And what's difficult is that the deals that have been announced are not real deals, they're MOUs. Most tariff and trade deals take 18 months to put together, right? 90 and 90 is not a realistic assertion. We can have MOUs and agreements, but I don't think that it's realistic to think that we're going to have really clear and strong trade deals that are long-lasting in nature. And so I think that's a little bit the market recognizing that and deciding, look, we don't really know what they're going to be. We have this assertion that there's a lot more bark than there is bite. And so maybe things are a little bit more business as usual. And the economy has just proven to be much more resilient than I think people had assumed. Part of that is just the strength of employment continues to be pretty robust. At the margins, it's eroding, but for the most part, that's still strong. And look, if an American has a job, they spend. That's just the relationship that there is.
Now, Julie, there's been a lot of Fed talk, and it's been kind of this back and forth. Some are saying keep rates steady. Others saying we need to cut now. So how are you reading all the latest talk from Fed officials?
Well, I think the UMich survey today was kind of interesting because I think the place that people care about is where are inflation expectations for the average consumer, and they've come down quite a bit from the most recent reading. So that's positive. It's still elevated. So if you are a Fed governor that's still worried about where inflation is heading, you have enough here to say, I want to hold off because we don't know what the tariffs are going to be. And, you know, if you believe that the tariffs are going to be not as big a deal, you can say, look, but inflation expectations have already come down. There's something for everyone. What we know is at the last bank meeting, there were 7 governors who voted to have no interest rate increases for the rest of the year, and there's only 2 more who want 1, right? So that's out of 19. And that tells you that there's still a certain amount of resistance towards making big moves in the meantime. And to me, that makes the most sense, right? We want to have and maintain flexibility because I don't really think that where we are right now in the 4s is that restrictive of monetary policy, right? The anchor place should not be 0%. That's not a normal place for it to be. It felt normal because we were there for a really long time, but it isn't actually normal. That's not the natural rate where interest rates should be.
Staying on the topic of interest rate cuts and Fed policy, do you think the stock rally needs 1, 2 rate cuts in 2025 to kind of continue this upward momentum? Or can we still see stocks continue the year stronger if we don't get rate cuts?
You know, I think it's more a function of earnings than anything else, right? But the rate cuts are going to be more impactful for smaller cap companies. Those are the ones who are really going to benefit from lower interest rates because most of them have financed their companies with variable rate debt. So that's the place where actually interest rate cuts would be more meaningful. I think it's less meaningful when you're talking about the S&P and large cap, right? Many of these companies are in large cash positions. So for them, it's kind of like, who cares? Part of it, though, is in understanding the sentiment. And if we get more of a small cap rally, if we get more breadth on this rally, I think then people feel more confident and more enthusiastic. We really learned a lesson with having a very narrow market is that when you have a narrow market like we did last year, it's really vulnerable to down shocks like we saw in March and April. So I think that that's the thing that people are hoping for is can we get more breadth so that we can feel more confident that this rally is sustainable?
Hey, Jill, before you go, in the last 30 seconds or so, let's get into different sectors. So does tech continue to lead or can we see a broadening?
I think tech continues to lead in the sense that that's where the earnings are, right? And if you think of 90% of a stock's performance over the long term being driven by earnings, that's where it is. But it's not all created equal. And I think that the important thing to recognize is that AI as a technology is a pretty flattening technology. And so the place in AI that I'm the most focused on is where do you have data assets that protect you a little bit? That's the kind of play that I think is more important, even beyond infrastructure like we're seeing with the Mag 7.
Julie, thanks so much. That was Julie Beal, Chief Market Strategist and Portfolio Manager at Kayne Anderson Rudnick. Let's pivot to housing, though, because we did see new residential construction increasing 4.6% to an annualized rate of 1.32 million homes last month, picking up after an almost 10% slide in May, according to figures that we got this morning. We're going to talk about all this with Drew Redding. He's Bloomberg Intelligence U.S. home building analyst. He joins us on Zoom from Princeton. So, Drew, we saw housing starts rebound in June. We saw strength in that multifamily building, but weakness in the larger single family market. How are we supposed to kind of understand that bifurcation in the two markets?
Yeah, it's always important to kind of look underneath the hood when you're talking about housing starts. As you mentioned, the strength is really in multifamily. If you look compared to last year, up over 20%, but the single family market was down about 10%. Similar dynamics on building permits where multifamily was up low single digits, single family is down 4%. And what that tells us is that single family home builders are going to continue to scale back production in the coming months. And quite frankly, it's what they need to be doing. And the reason for that is because there's such an elevated level of supply of new homes out there in the market. You know, the last data that was released shows we're at the highest level since 2007. the composition of completed homes, which is really the risk to the builders because those are the ones that tend to get more heavily discounted. They're at the highest level since 2009. So what you need to see the builders continue to do is start to work through that inventory and take their foot off the gas pedal in terms of new production.
Now, over the past several years, you kind of touched upon this, but U.S. home building got some help from the lack of supply. And today's numbers aside, how have things changed since then? Drew, can you take us kind of through that timeline?
Yeah, that's a great point. And the lack of supply for sale listings, let's call it, in the resale inventory has really been one of the key points of contention for the U.S. home building industry. It's been one of the major drivers for the builders. Shoppers didn't have options, so it kind of funneled people into the new home market. So that's been a major tailwind. But as you mentioned, that has shifted to a headwind now. We had inventory, which was up over 30% last month. Now, if you look at the national level, we're still about 10% below pre-pandemic levels. But I think when you look at the national numbers, it's really skewing what's happening out there in the market. We now have 10 states where resale supply is higher than it was in 2019. And among those are some of the most important markets for the builders. So think of areas like Florida, Texas, some markets in the Southwest like Colorado and Arizona. And when you dig deep, even further in, some of the most importance for the builders, you're seeing inventory levels significantly above where they were in 2019. So what this means is that the competitive dynamic has really shifted for the group. Each sale is a little bit harder to get, so they're having to lean more heavily on incentives. And what we're increasingly starting to see is builders lowering prices outright, which is something that they tend to try to avoid, but we're seeing it more and more.
Speaking of prices, I'm wondering just in the last minute or so, how does affordability look right now? Obviously, mortgage rates are still high. It's been a topic that Trump has touched on to try and persuade the Fed to lower rates. But how is housing affordability right now?
Sure, affordability is still bumping along some of the worst levels on record. You called out rates. That certainly gets a lot of the attention, the publicity, but it's really home prices. Home prices are up more than 50% since 2019. At the national level in the resale market, we're still rising in that low single-digit pace. But that upward trend is starting to slow. And similar to inventory, if you look at local markets, in a handful of the top 50 markets, we're already seeing prices decline low single digits. And, that trend is also something that we're seeing in the new home market as builders have to get more competitive. They're lowering prices as well. So, it's certainly a local situation here. And I think it's something that will start to kind of spread throughout the remainder of the country as we move through the year.
All right, Drew, always appreciate your insight. Thank you very much. That's Drew Redding, Bloomberg Intelligence U.S. home building analyst, talking about those housing starts numbers and so much more. This headline coming across the Bloomberg, J.P. Morgan expanding its research to private firms, starting with OpenAI. We'll have more on that. Also coming up, some big Netflix news, right? You've been hearing about it. Well, we have Geetha Ranganathan. She's Bloomberg Intelligence analyst on U.S. media. She's going to recap all those earnings because they were pretty impressive. But the thing is, Netflix shares, they're down nearly 5%. So she's going to break down the reason for all that. And this is on a day when we've got the stocks mixed right now. S&P 500 down about up about 2 points. Dow down 127. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks retreating from records. Bottom line, though, lower, little change with the S&P 500 index right now down 3 points, a drop of under 0.1%. We've got the Dow down 174. Dow Industrials down 0.4%, while NASDAQ right now lower by 16, also retreating from a record, down by 0.1%. 10-year 4.43% with the 2-year 3.86%. Gold up $17 the ounce, $33.55 right now, up 0.5%. West Texas Intermediate crude back above 68 a barrel, 68.35, up 1.2%. And Bitcoin down 1.5% at 117,633 on Bitcoin. Bond yields fell as Fed Governor Chris Waller on Bloomberg Radio reiterated his case for a July rate cut, while data showed an improvement in consumer expectations for inflation. Julie Beal is portfolio manager at Kayne Anderson Rudnick, and right here on Bloomberg Intelligence, she told us moments ago, no question, tariffs still creating lots of uncertainty.
What I struggle with is thinking about the risk that some of these tariffs are enacted, right? And what's difficult is that the deals that have been announced are not real deals, they're MOUs. Most tariff and trade deals take 18 months to put together, right? 90 and 90 is not a realistic assertion. We can have MOUs and agreements, but I don't think that it's realistic to think that we're going to have really clear and strong trade deals that are long-lasting in nature.
Julie Beal of Kayne Anderson Rudnick, interviewed right here on Bloomberg Intelligence. Barcelona is set to reduce the number of port terminals for cruise ships in the city's latest attempt to limit the number of tourist visits. Right now we got Carnival down 0.7%, Royal Caribbean up 0.5%, Norwegian Cruise Line Holdings up by 0.2%. Recapping stocks meandering, S&P right now down 4 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie Pellet. This is Bloomberg Intelligence. I'm Lisa Mateo alongside Emily Grafeo. Netflix came out with their earnings. Are you a big Netflix watcher? Emily, what do you like?
You know, I dabble in Netflix.
Okay.
I do. I have the like the cheapest version of Netflix, like with ads.
So you get the ads.
Yeah, I get the ads, which I probably should just pay up because I think it's like a $2 a month difference. But like I'm a little chintzy on that. But I do watch the Dallas Cowboy Cheerleaders Netflix show.
Oh wow!
I think it's really well done. So I don't watch a ton of Netflix, but I do. I think I bought the Netflix subscription to specifically watch that.
Yeah, well, that's what a lot of people, I mean, I don't know. I haven't gotten into the Squid Games. That's huge for them.
Right.
Stranger Things, a little bit, I dabbled in. But the thing is, overall, they had some impressive results, right? But the problem I'm having this morning is shares are low. We have Netflix down nearly 5%. What is going on here to explain it all for us is Geetha Ranganathan. She's Bloomberg Intelligence analyst on U.S. media. Geetha, thanks. Always a pleasure having you here because you break it down like nobody else does. So talk to us why those Netflix shares are lower this morning.
Yeah, so what I would say, Lisa and Emily, is results were definitely solid. I mean, we had a solid second quarter print, whether it was second quarter results, whether it was, third quarter guidance, everything came in above expectations. They even raised guidance for the full year, both for revenue growth as well as for operating margin. But I think what we're really seeing, and kind of the muted reaction in the shares today is really because expectations going into the quarter were extremely elevated. And while I say that the quarter was solid, it probably was not exceptional. And I think that is what investors were really hoping for, and you really needed for, the stock price to go even higher. So at this point, valuations really, really high for Netflix, trading at about 45 to 50 times forward earnings. So obviously you needed some huge catalysts, which we have fundamentals that are really, really strong. But if you have that one big thing, well, Netflix didn't necessarily have that this latest earnings report.
What did we learn in the earnings just about what at least Netflix is thinking about for the next leg of growth? Are they planning more content? Is it more about focusing on live events?
Yeah, it's a little bit of everything, actually. So just if you look for the near term in terms of the next leg of growth, so we're just looking at the next 6 months or so, they actually have a massive monster slate, and they characterize this as one of their best 6-month periods ever. You mentioned Stranger Things, you talked about Squid Game, you have Wednesday, you have a whole bunch of other live events, including the NFL. You have some boxing matches, so they really have it all coming up. Not just the 6-month period. The upcoming 6-month period is, of course, going to be extraordinarily strong. But then even into 2026, I mean, management was talking about how they have really this excellent standout content lineup. So content is obviously going to be a very, very big thing for them. But as we kind of look out, every year has its own special, catalyst. So in 2024, for instance, it was subscriber growth. It was all about subscriber growth. And you had, this password crackdown initiative. You had the new advertising tier that pulled in over 40 million new subscribers just in that 1 year. Then for this year, 2025, it's really all about price increases, right? So they already raised prices. We're talking about 16 to 20% price increases across most markets, and they're going to continue to raise prices. A lot of it on the back of that content slate, that monster content slate. But then really, as we kind of look forward to 2026, the big catalyst, and I think the big market mover for Netflix, will be its advertising business. So we've kind of seen them, dabble a little bit in advertising. They've been a little bit late to the game, I would say, in advertising. This was a pure subscription service, but they've gotten, I think, most of the pieces ready for that business to take off in a big way. They said that their upfront sales so far has been pretty encouraging, and you're absolutely right in terms of the live piece of the puzzle there, because they really need to have a very good live event strategy in order to attract all of those top global brands and top advertisers. And I think they're doing exactly that. And so next year we're going to see advertising. I mean, it's so far it's doing still pretty well. They've said that they're on track to double their advertising revenue for 2025, but I think it's going to take off in a really, really big way next year. And then by 2020, in another few years' time, I mean, expect this to be about 10 to 15% of their total revenue. So it is going to become a big portion of their growth story going forward.
Yeah, I love the live events, like the boxing match, Amanda Serrano. I was all over that. It was a good one. So you mentioned these prices. So how much can Netflix continue to raise their prices for subscribers? I mean, before they start to tune out, before Emily Grafeo shuts it off.
I actually think they have very good pricing power. And a lot of that, of course, is going to be based off of the content. And they're obviously continuously investing in the content, in a disciplined way, but they're definitely broadening it. They're deepening it. And the content definitely has huge appeal. I mean, we've seen this, time and time again when they put out all of their engagement reports. You have every Netflix subscriber watching, the Netflix content for an average of about at least 2 hours a day. So that's definitely pretty strong. So they're going to continue to keep adding to that content in terms of, live events, in terms of other things. And, I think that is definitely going to be a big growth catalyst for them.
Just very quickly in the last 30 seconds here, Geetha, talk about their competition right now, because there are a ton of streaming services, but obviously, I mean, Netflix is up about 90% over the last year. Did this earnings result show us that they're still the clear leader in streaming?
Yeah, they are the undisputed leader. I mean, there's absolutely no doubt about this. They've won the streaming wars. The only one other name that kind of keeps coming up in terms of, viewing time would be YouTube. But I think both of those platforms are very different. So Netflix really kind of specializes in premium content and scripted content and prestige dramas. YouTube is really more for kind of casual user-generated content. But again, the way that Netflix management has kind of framed this whole question about competition is that, they still have, if you kind of just look at the whole viewing time, Netflix and YouTube combined only have about a 20% share. So they're really 80% is still up for grabs. And the way that, Netflix is kind of characterizing that is there's still plenty of upside in terms of them kind of capturing more share. But you're absolutely right. They are way ahead of their competitors in terms of viewing share right now.
All right. Thank you very much, Geetha. Always glad to have your insight. That's Geetha Ranganathan, Bloomberg intelligence analyst on the U.S. media, keeping us all on top of Netflix earnings. Coming up, we have Paige Smith, Bloomberg consumer finance reporter. Going to be talking about American Express. This is Bloomberg Intelligence.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, welcome back to Bloomberg Intelligence Radio. I'm Emily Grafeo with Lisa Mateo. Paul Sweeney is out. We had a slew of earnings today and a good read on the consumer coming out of American Express. Shares were falling, but the credit card company's expenses were higher than expected. TD Cowen called the results neutral overall, noted that the earnings upside was driven by a lower than expected tax rate. We're going to have Paige Smith, Bloomberg consumer finance reporter, break all of this down. Maybe we could start with how Amex is standing out from competitors right now. And what did the earnings overall show us? Because it does really feel like this is a crowded space here for like premium credit cards and premium consumer finance companies.
Certainly. Thanks for having me. I think the one thing that I would note is that Steve Squeri, who's the CEO of Amex, got a lot of questions on this morning on the analyst call. Just the idea that, of course, the premium space, folks who really love rewards on their credit cards, travel, hospitality, airport lounges, all of those nice things. It's a very crowded space, and it's getting more crowded, actually. Citi just announced earlier this week, for example, that they were actually re-entering the space after sort of taking a bit of a hiatus there. So it's certainly an area to watch, but Amex really asserted itself during this batch of earnings to basically say, listen, we are sort of the original premium card offer company here. and we're going to continue being the premium card offering for consumers in the U.S.
Now, they had record card member spending. So what does that say about the state of the consumer? They're continuing to swipe away.
Yes, that was another question that Steve fielded a couple of times on the earnings call. It essentially does say that folks in the premium space are continuing to swipe, tap, and spend in every preferred way. And yes, it's sort of all's well for the Amex consumer at this moment in time, certainly.
Did we learn anything about any specific updates to the Platinum card? Because people get so obsessed with the
people
perks.
love the updates, and again, yes, it was certainly asked, and no, we do not have any more updates for you just yet. We know again that the updates are coming in the fall, and we know that the competitive landscape is tight. But
are they going to raise the price?
I think it's safe to say that they're going to raise the price. That's me putting my spin on things, but if they didn't raise the price, it would be a pretty great deal. I'll put it that way. And I don't think the economics would really make sense for the card if they did not raise the price.
But I'm thinking, so if more people are taking advantage of all these perks, right? Because I know I do. Like if I'm tracking my points like crazy. So does that kind of mean that, you know what, the consumer is kind of cautious at the same time because we want to go for those deals?
That's a really good question. Yeah. I don't know if that's the case. I think that there are a lot of deals and rewards hounds out there like yourself who really just track it very closely. And there was a comment made on the call that it was something along the lines of, consumers really like these rewards and they track them very closely and they pay for value. So I wouldn't say it's maybe a warning sign. I would say it's more of a sign of like a savvy consumer per se.
Stable coins are very hot right now on Wall Street. Is that a threat to Amex's business?
Well, so it's certainly been the flavor of the week, if you will. Stablecoin, the word stablecoin has popped up in pretty much every earnings call I've tuned into over the last week, whether it's the big Wall Street banks or even Schwab mentioned earlier. Schwab reported earnings this morning as well. And, when it comes to Amex, they basically said they're very closely watching the technology to see how they can either issue their own stablecoin or partner on a stablecoin offering of some kind. They sort of hedged and said it's still early days relatively. But one thing was very clear, which is Steve Squeri came right out and said, is this a threat to existing payment rails? No, it is not. And that's kind of the same thing that we've been hearing kind of across the payments companies, whether it's from Visa or MasterCard, Amex, kind of the same tone there.
So are people paying off their Amex bill? I mean, how is credit card debt?
So an interesting stat actually that they highlighted in this round of earnings was that Gen Z, so Amex is making a pretty concerted push in the younger consumer space at the moment. And they highlighted that Gen Z and millennial spenders were paying, their delinquency rates or kind of being like 30 plus days past their bills, were actually lower than industry trends for older consumers. So you would think, younger people are just getting used to paying off credit cards and sort of learning about how to handle their debt. And there was kind of some question about Amex targeting these younger consumers with this like premium credit card that comes with fees. But they've basically countered and said, hey, so far so good. They're actually paying them off. The delinquency rates are quite low compared with the industry, definitely lower compared with the industry in their peer group, but even lower among older consumers. So kind of an interesting metric I thought that they highlighted this morning.
Well, that's some good news. If people pay their bill, you have to. Paige Smith, thank you so much for joining us here in the studio. She's Bloomberg consumer finance reporter talking about Amex and credit card debt and all of that. This morning, for our listeners in the U.S., a reminder, you can listen to us via satellite radio. It's on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM's channel 121. That's presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence is starting up in just a few moments. And this is on a day when S&P right now is down about 4 points. The Dow down 194 points and the NASDAQ down about 13 points. Even the Bloomberg Dollar Spot Index, that's lower. It's off about 0.2%. You are listening to Bloomberg Surveillance. I'm Lisa Mateo alongside Emily Garfano.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning. I'm Lisa Mateo alongside Emily Garfano. This is Bloomberg Intelligence. Paul Sweeney has the day off. It is that summer Friday thing, so he's joined down at the Jersey Shore. We've got a lot for you coming up here on this next hour of Bloomberg Surveillance. We're talking with Joanne Chu. She's University of Michigan Surveys on Consumers Director. We had the UMich data out, so we're going to be bringing the latest data, the latest information on that. Also, earlier today, we had Federal Reserve Governor Christopher Waller. He was speaking with Lisa Abramowitz, Jonathan Ferro, Michael McKee, so we'll have a recap of that for you as well. But first, to get things started, let's kick it off correctly with our very own Charlie Pellet.
All right, thank you very much. And here's what's going on. We have got the Dow, the S&P, NASDAQ all slumping right now, all in the red, giving up earlier gains, and yes, retreating from records. Here's where we stand, right to the numbers. S&P down 7 now, 62.90. Have been trading above 6,300. We've got the S&P down 0.1% right now. Dow Industrials down 195, decline there of 0.4%. NASDAQ Composite Index down 29, a decline of 0.1%. 10-year at 4.43% with the 2-year 3.87%. Gold down, gold up $14 the ounce. The precious metal up 0.4%. 33.53 the ounce. West Texas Intermediate crude gain there of 1.4%, 68.50. Crypto week in Washington. Bitcoin down 1.1%, 118,180 right now on a Bitcoin. Fed Governor Christopher Waller says worries about hiring in the private sector have driven his call for the central bank to cut rates this month. In an interview aired on Bloomberg Radio this morning, Waller was asked if waiting until September for a rate cut would be too late.
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks?
And in that interview, Waller was also asked if he would take the job as Fed chair.
Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it.
Federal Reserve Governor Christopher Waller interviewed this morning on Bloomberg Radio. Chevron has won its arbitration battle with ExxonMobil, clearing the way for it to buy Hess Corp more than 20 months after the $53 billion deal was announced. Hess shares no longer trading. Chevron lower by 1%. Recapping, S&P down 5, drop there of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. I'm Lisa Mateo alongside Emily Garfano. You are listening to Bloomberg Intelligence. So we had some consumer sentiment data out. It rose to a 5-month high early June. Expectation about the economy, inflation. It looks like it's continuing to improve, but we want to dig more into this. So let's bring in Joanne Chu. She's University of Michigan Surveys of Consumers Director. Joanne, pleasure to have you here. So you're seeing the data come in. What does it tell you? I mean, are expectations about the economy, inflation, are they getting better?
So certainly expectations about inflation are improving. We've had several months of consecutive declines in both short-run and inflation expectations and long-run inflation expectations. But we are hardly out of the woods yet. These expectations still came in considerably worse than both 6 months ago as well as a year ago. And although consumers are not worried quite as much about the worst case scenario that they had been anticipating in April and May, they still expect inflation to reaccelerate in the years ahead.
So Joanne, consumers expect prices to rise at an annual rate of 4.4% over the next year. That's much higher than the year-over-year CPI reading that we got. Why is there such a divergence here between what consumers actually think and what the data is showing us about inflation?
The CPI is backward-looking, is telling us what happened to prices over the past 12 months, whereas inflation expectations are saying what's going to happen in the next 12 months. It's very clear from the survey that the number one factor that consumers are thinking about are the potential impact of tariffs. And I think there's a recognition that it might take a little bit of time for tariff policy to pass through to consumer prices, but consumers broadly expect that to happen. In April, when the reciprocal tariffs were announced and then paused, consumers were really expecting something quite catastrophic to happen. And at that time, we saw inflation expectations even higher than they are now. But I think consumers are less worried about that worst case scenario, that maybe the reciprocal tariffs, that eventually tariff policy might settle at something lower than the reciprocal tariffs that were announced in April. But again, they are still worried. They have recognized that inflation, slowed down in 2023 to 2024, but looking forward, they are expecting tariffs to eventually pass through to their prices.
All right, Joanne Chu, University of Michigan Surveys Consumer Director. Thanks so much for joining us. We appreciate your time. All right, let's see what stocks are on the move this morning. I'm Lisa Mateo, Emily Grafea. We're joined by Bloomberg's Valana Hadrich, Bloomberg Cross Asset Reporter. Thank you so much for joining us this morning.
Thanks for having me.
So where did you want to start?
Let's start with Netflix, ticker NFLX.
Sure.
And shares are lower about 5% today, even though last night the company reported second quarter results that exceeded investor expectations in just about every major metric, with the company saying revenue grew to $11.1 billion and earnings jumped to $7.19 a share, and it also raised its forecast for full-year sales and profit margins. And the company mentioned that there have been a couple of really big hits, including Ginny and Georgia and the final season of Squid Game. I watched the first season of Squid Game. I could not stomach the second season of Squid Game, so I'm not one of those fans, but apparently these are quite popular.
Do you watch a lot of Netflix, or?
Of course.
Really?
Don't
I feel like you're not a TV watcher.
Oh, I watch TV. Yeah.
Okay.
Yeah.
Okay.
I'm into Apple, the Apple streaming app.
Oh, Apple TV.
Recently, yeah, because I hope no one from Apple is listening, but I took my mother-in-law's login.
All right. What other stocks are you looking at?
We're also looking at Lululemon, LULU. Shares of Lululemon are also lower today, following a note from an analyst at Jefferies that said the company is facing slowing sales, fewer store visitors, waning demand for its iconic black leggings. I bought a bunch of Lululemon stuff pretty recently. I spent more money than I should have, so this was a surprise to me, but shares are lower following this note, which is really making its rounds.
Yeah, that stock has been getting crushed year to date.
Down some 40% through the Wednesday close. That's right, yeah.
Yeah, okay, and your last stock?
And the last one is 3M. Ticker, of course, is MMM, and those shares are slightly lower today as well. But the company did raise its profit forecast and it beat Wall Street's estimates for the second quarter. And its CEO, he has this effort undergoing to reinvigorate the company, and that seems to be gaining some momentum. So the company said adjusted earnings will be $7.75 to $8 a share this year, and that includes some of the expected impacts from tariffs, and that was up from a prior range that topped out at $7.90, and analysts had been expecting $7.70, so much better than expected results.
All right, Valana Hadrich, thank you so much for joining us, Bloomberg Cross Asset Reporter. For more conversations like this, you can subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Okay, so earlier this morning, Fed Governor Waller, he joined Bloomberg in a wide-ranging conversation on the labor market, the Fed, and also on a lot more. His stance on cutting rates in the next next Fed meeting. So in this portion of the conversation, he was asked by Bloomberg's Michael McKee if he would dissent during the July meeting if the majority decides not to cut rates. So take a listen.
Well, I never want to commit to an action before the meeting. Otherwise, if everybody committed before, you don't even need to have the meeting to have a discussion. So the goal is to always go to the meeting, sit down, listen to all sides. People will try to convince me of their view. I'll try to convince them of my views. And in the end of the day, you make a decision on what you think is the right outcome and the right data, how the data is coming in. And right now, I laid out my case last night. I don't think I could be any more clear, I hope, as to what my position is and why I think we need to do this. It's just how I read the data and how I think about going forward, how you respond to anything that involves tariffs.
There's a lot of politics in this decision coming up, more than usual. And I'm wondering, Governor Bowman has also suggested she would prefer a rate cut in July. If two of you vote for a rate cut, if two of you were to dissent, would you worry about the market reaction to that?
You know, one of the things that has always bothered me since I took this job is the criticism that we are nothing but groupthink. All the meetings are the same. Nobody dissents. Nobody does anything. And I think this is healthy. I think this is a turning point in the way we want to think about policy. Some people don't want to cut, some do want to cut, but coming out and making the case either side, that's good, healthy debate. Otherwise, if we're always going to do the same, the joke is, why don't you just have one person set policy and send the other 18 FOMC members home? So this is healthy. I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussion about where policy should go. It doesn't mean anything about politics or anything else. It's make the economic argument and then see if you can convince others to go along with you. And that's all I'm trying to do.
We totally agree with you, for the record. We were sick of the groupthink, and it's good to have dissent.
Yeah.
Mike essentially is asking if you will dissent at the end of this month. Is there value in dissenting on the FOMC?
Well, I mean, it's often the case that you dissent if you make it very clear you think at this moment in time this is an important thing to do. If you were to go in and do kind of a jihadist, I'm going to dissent at every single meeting no matter what happens, then you don't even have to show up. Everybody knows what you're going to do. So it is important to make sure that if you dissent, you do it carefully and you have the right reasons, and it's not going to turn into a serial dissenting potential case. I mean, that's how I take my job seriously and responsibly. So I only would think about doing this. I dissented on the balance sheet slowdown earlier this year because I felt like that was not needed. And that's kind of the situation we're in now.
Chris, if you do cut, the markets will go one way. If you don't, they'll go another, perhaps. How critical is it to get to a rate cut fairly quickly? You've mentioned the danger to the labor market, but if you do wait till September, is that going to be too late?
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks? That's exactly the thing. It doesn't kind of matter. Just start thinking about, do I want to wait and risk something happening? This is what we saw last summer, by the way. We left July, we left rates, and then boom, we got a very weak, bad labor market report. The unemployment rate jumped 0.2. Payrolls went way down from where they were, and people were screaming at us last August, you guys should have cut in July. So 1 month it always is 1 month. Just remember that, it's just 1 month. But we live in a world in which we have to respond to real-time data to kind of sense of where the economy is going. And I've always said, if you worry about long and variable lags, which everybody always talks about, the whole point of that is to get ahead of it, not wait for it to happen, and then take a policy action that takes quarters or months down the road to actually have any impact.
All right, that was Federal Reserve Governor Christopher Waller speaking with Bloomberg's Lisa Bromwich, Jonathan Ferro, Michael McKee. Now to bring in more to kind of break down more of this interview, but also more of what's going on with the Fed is Stuart Paul, U.S. economist with Bloomberg Economics. Stuart, I want to start with you about kind of the tone that Waller said. Would you call it dovish?
I do think he struck a more dovish tone. Okay. He was really focusing primarily on the cooling labor market. Now, everybody looked at the June jobs report, breathed a little bit of a sigh of relief when the unemployment rate ticked down and we registered 147,000 jobs added during the month. Waller completely discounted that report. He said, look, all the hiring was concentrated in the public sector. Private sector hiring was really slow. The availability of labor supply is diminishing, and we should be cautious about the labor market at this moment. In fact, not only do we talk about cracks in the labor market, he compared the current economic situation to standing on a frozen pond and feeling cracks in the surface of the ice below his feet. He's definitely striking a dovish tone, and he's preparing markets to brace themselves for when he dissents from the consensus in July and instead votes for a rate cut. But the consensus on the committee will be to hold rates steady.
It's kind of hard to kind of parse through, you know, how seriously we should be taking his message. Is it like, how much does it really tell us about the strength of the economy versus someone trying to be the Fed chair, trying to say, you know, what Trump wants to hear? Obviously, the Fed claims that they're not politicized, but it does feel like everything these days is becoming
It does feel
political.
that way. Yeah, it does feel that way, and there could be a little bit of politicking going on. Waller is somebody who's comfortable dissenting, so I don't want to make this just strictly a set of circumstances. He's trying to put himself out from the bunch to gain the president's favor. He has dissented before, as we just heard in the audio drop. He dissented when he voted in favor of maintaining the pace of balance sheet runoff rather than slowing the pace of balance sheet runoff as they did earlier this year. So he's comfortable standing out from the pack. He has been very right about the labor market so far. He was outside of the pack saying that, look, firing would not take off. Instead, the cooling of the labor market would instead be a diminishing excess demand for labor, falling job openings. And that's exactly what we've seen. So he has a lot of credibility, and I don't think that there's any downside for him in maintaining his position as somebody who's a little bit more dovish than the rest of the pack.
Yeah, one of the things I found interesting during this interview is they, kept asking him, would you take the position of Fed chair? And he kept saying, if I was asked, I would take it. And then he said, well, I haven't been asked. So what was your whole take on that about that position of Fed chair?
This is the real campaign season that we should care about. Forget the midterms coming up next year. It's very clear that folks are campaigning right now. Kevin Warsh, it seems like, is on every single news outlet. This has been Waller's opportunity to get his name out there, to start putting himself forward as a viable candidate. Right now, we think that Kevin Hassett, who's currently working in the White House, might be the top contender. He's worked with Trump for years. He was in the first Trump White House. His expertise is a little bit more focused on taxes than on monetary policy. And so that might be a point against him. He might have a little bit of a harder confirmation process. I think that Waller is doing a good job of getting his name out there and perhaps even just getting himself a bit more on Trump's radar, reminding him, I had your confidence the first term when you put me on the board of governors. Keep that confidence in me to take the top job when it comes up in May.
This is going to be a continuing story. Stuart Paul, thank you so much for joining us. He's the U.S. economist with Bloomberg Economics. Coming up, we've got a lot. We've got Munis in focus. Daniel Moran, Bloomberg Municipal Finance, talking about the Muni market. So we'll talk about that too, because there's been a lot of rain, flooding. What does that mean for the municipal bond market? Stay tuned. We've got more in Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all in the red. Bond yields fell as Fed Governor Christopher Waller reiterated his case for a July rate cut. Those remarks coming on Bloomberg Radio this morning. S&P right now lower by 4 points, a drop there of just under 0.1%. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. The Dow down 165, now down 0.4%. We've got NASDAQ lower by 12, drop there of 0.1%. And by the way, a retreat from records for the S&P 500 index. 10-year at 4.41%, the 2-year 3.85%, and the 30-year 4.99%. Gold right now up $15 the ounce. That's a gain of 0.5%, 33.54. West Texas Intermediate crude 67.41 a barrel, down 0.2%. At a 1.5% drop right now for Bitcoin, 117,673 on Bitcoin. Consumer sentiment, as measured by the University of Michigan, rose to a 5-month high in early July as expectations about the economy and inflation continued to improve. Joanne Shu is director of the survey. She was interviewed right here on Bloomberg Intelligence moments ago.
We are hardly out of the woods yet. These expectations still came in considerably worse than both 6 months ago as well as a year ago. And although consumers are not worried quite as much about the worst case scenario that they had been anticipating in April and May, they still expect inflation to reaccelerate in the years ahead.
Joanne Shu of the University of Michigan, interviewed right here on Bloomberg Intelligence. After earnings, Schwab shares, they're higher right now by 1.9%. After earnings, American Express lower now by 3.1%. After earnings, Ally Financial down 2.7%. Recapping, little change for the U.S. equity market. Right now, the S&P down less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus and Munis brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. All right, so many different things. High interest rates, inflation, the news flow, right? It can impact the markets, earnings, but also, yes, the municipal bond market. So here with more on that is Danielle Moran. She's Bloomberg Municipal Finance Team Leader. Thanks for joining us, Danielle, right here in the studio. How is this current economic climate affecting muni issuance, investor appetite?
Yeah, I mean, muni issuance has had a banner year this year. We are up about 21% over last year, which was a record year. So we're seeing a lot of issuance come out of entities like states, cities, local governments. We have airport bonds. We have college bonds. If you're an investor and you're looking for muni debt, there is a lot to buy these days. In terms of investor demand, we are also seeing inflows into municipal bond funds. So that supply is being well absorbed. That being said, the return side of the market is a bit lackluster. We're running about 1.2% down year to date, but that has provided some really nice yield for investors being interested in the securities.
There's a lot of talk about when are we going to get the next rate cut from the Fed. We had Fed Governor Waller saying that he would vote for a cut in the next meeting. We do have Treasury yields down. I'm just wondering how that kind of rate outlook impacts munis at large if we were to get a cut at some point this year.
Definitely. I mean, the muni market tends to follow the Treasury market. So we joke on the team a little bit. It's a bit of a laggard. So today munis are unchanged. It's a slow Friday. People are maybe on vacation. But typically the muni market follows the Treasury market, just in a little bit of a less dramatic fashion. So if the Treasury market is selling off, muni market will also probably be selling off just less, and then we'll see the reverse if there's a rate cut.
I talk about a lot about news flow and how different things in the news affect the muni market too. So we've been hearing a lot of stories about flooding, you know, from New Jersey to Texas. I mean, are climate-related risks being factored in more heavily into muni credit ratings or issuance plans at all?
That's a great question. The rating side is a bit nuanced because each disaster affects the locality and the credit differently. So when you have something that happens, if it's happening in an area that has a very diversified revenue stream, usually the ratings will be okay. If it impacts, if a hurricane comes out and wipes out a single site hospital, and that's the only hospital in the system, then you might have a more material impact on the credit. But the issuance side is really interesting because historically, FEMA has come in and provided a lot of support for the rebuild. I think that is a bit up in the air on whether or not that's going to continue to happen. So investors are taking that as a bit of a credit concern. But we've also seen more issuance for climate resiliency measures. So after the floods in Houston during Hurricane Harvey several years ago, Harris County, the county that Houston's in, came out. They issued a ton of debt to try and prepare for the next one.
What's going on with airports? One of your reporters wrote a couple days ago, airport municipal bond sales hit a record in the first half, the total volume of airport muni issuance. Why is that?
So for a few different reasons. One is that people are flying. You go to the airports, they're crowded. So when airports are going through their development plans, they're adding more gates, they're upgrading their facilities, they're making it an enjoyable experience once you get through a TSA and you go get a croissant at a restaurant. It's nice now, and some of the airports are going through these capital plans and they're making the airports bigger to account for that passenger travel, so that costs a lot more money. Then also construction materials, the cost of construction has gone up with inflation, and so the project costs have also gone up, and more cost means more bonds.
Now, with all that said, you said airports. So what sectors, are we talking maybe healthcare, transportation, education, like there's so many, which are facing the most credit stress in the muni market?
I think that's a very interesting question. Right now, a lot of people are looking at healthcare, often because of the One Big Beautiful Bill that passed Congress and was signed into law by President Trump. You're seeing some impact, or you could see some impact on hospital and healthcare systems because of the cuts to Medicaid. Although those won't happen for several years, investors are starting to think about what that could mean for hospital systems around the U.S. if they're not getting the reimbursements they once were.
All right, and are you noticing a shift in the type of investors that are taking part in the muni bond market recently? Like the type, whether it's retail, institutional?
Yeah, munis is primarily a retail-driven asset class, but they're investing in different ways. So we're seeing an increase in ETFs, something that's really mobile, people getting in.
Oh, you're talking Emily's language now.
My eyebrows are going up.
That has been a trend in munis. SMAs have been a really big trend in munis in the last couple of years. Those typically like short duration. So we're seeing a lot of demand in 10 years and under. But typically munis are very safe, so direct retail likes them. You get a lot of people going further out the curve because there's more value there right now too.
Danielle Moran, municipal finance team leader at Bloomberg. Thank you so much. It's always good to get that muni in focus on a Friday. We're going to pivot now to maybe a less stable and safe haven asset. Some people might say it's a safe haven asset, crypto, because crypto market value has topped $4 trillion as the stablecoin bill passed in Washington. We're going to talk about this with Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Nathan, what is your take of the crypto week that we had in Washington? How much of this week was really a win for the industry?
So it was a tremendous win in which they were able to get one of their bills across into the president's desk, and this is the Genius Act. This is the stablecoin bill. Now, this bill only deals with stablecoins and doesn't deal with the broader crypto market structure for things like Bitcoin and Ethereum. So from the crypto perspective, they got a taste of what they want. What they really want is what's called the Clarity Act. This was one of the other bills that the House of Representatives passed this week. Now, this goes to the Senate, and we are just putting out an update where we think that it's going to stagnate, and you're not going to see really much movement on the Clarity Act until next year, which is somewhat, disappointing, I think, for the crypto sector, because until the Clarity Act passes, companies like Coinbase and Robinhood, they can't move forth and have a regulatory framework. So the Genius Act was great for companies like Circle, but for the rest of the industry, there's still more time to cook.
Well, Nathan, on that legislation news, what has it done for crypto-related stocks like Coinbase or something like that?
So there was obviously positive momentum with this, and there was a lot of, I would say, sentiment and expectation. Obviously, when one of the political hiccups happened earlier this week, we saw Circle decline 8% and subsequently get that back. So, I would just say that for a lot of the crypto stocks at the moment, it's sentiment, because there's this idea that, President Trump is going to be, or at least is going to make America the crypto capital of the world, as he likes to say. But again, we just want to temper that with this idea that the Clarity Act needs additional support from Senate Democrats, including some Senate Democrats that may be a little bit hesitant to support something that benefits the president directly through his, involvement in the crypto space. So, there's a lot of sentiment growing, and there's a lot of discussion from the SEC and CFTC perspective. SEC Chairman Paul Atkins was on TV this morning just talking about what he's going to do. But this Clarity Act, this is the bill that the industry needs in order to be able to move forth and remove a lot of the uncertainty that comes with the crypto space.
What are really the key tenets of that Clarity Act, and will they be able to, I guess, stay in place if we get more Senate Democrats on board? Or is the bill going to change in a way that maybe it wouldn't be as good for the industry in order to, actually get passed?
So the bill is almost certain to change. I mean, look, it's what happens in Washington. The Senate jams the House, and the Senate just says to the House, you're going to do what we say. That's mostly what happens. But there's two tenets here that are mostly important, and that is what is a security versus what is a commodity. Now, Bitcoin is a commodity. It's deemed as the courts as a commodity. And the reason why the crypto space wants to go into the commodity space is that because the CFTC, rather than the SEC, would oversee that space. And in our view, they have less onerous regulation. The other thing is the CFTC currently does not have authority over spot markets. So there's really nobody that oversees the crypto space from a regulatory perspective outside of those that are securities, which is just a small subset. So when you're a firm like Coinbase or Robinhood and you say, I want to go forth and I want to have all these offerings related to crypto, there's really no regulations here that they can play back to. And so they're operating in almost in a gray area. And that is why there's always this risk that a future SEC chairman, similar to what we saw with Gary Gensler, could come back and say, here's a lot of enforcement actions for your trouble. So it's a lot of clarity that they want, but also that ability to feel safe and know that we can actually grow and be protected.
All right, so Nathan, we've seen Bitcoin go above 120,000, but some experts are saying the path to 150,000 looks a little more and more likely. Do you agree?
Well, I leave the commodity pricing to some of my other my friends.
Doesn't have the potential. Yes.
Yeah, but what I will say here is that a lot of it was sentiment. And we're not just seeing this in the crypto space. We're seeing this with just generally ideas of the Trump administration. Just go to deregulation in the bank stocks. There's a lot of sentiment here about what is the Trump administration going to do. But now that we've gotten past the one big beautiful bill, there's a lot of things that are going to start happening in the second half of this year. For example, this Clarity Act, if it passes, then there are going to be additional rules. And that sentiment will then actually be turned into details, and we'll be able to estimate what that does for the companies and those currencies. So I will just say is that sentiment does turn into action, and we're beginning to see the action take place in the second half of this year.
Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Thank you so much for joining us. Have a great Friday. Coming up, Catherine Doherty, Bloomberg finance reporter, on the big take. Jane Street's secrets spill into open and face rivals scrutiny. We'll have that in just a few moments. Taking a look at markets, though, S&P 500 pretty much unchanged. It's been trading like that all day. NASDAQ 100 also unchanged, but just a little bit in the red here. Treasury yields lower across the curve. A lot of movement in that front end, the 2-year at 3.8%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks wavering near records as traders parse a handful of earnings. Right now, the S&P 500 index, we'll call that unchanged on the day. NASDAQ is advancing up another 4 points, up by less than 0.1%. Little change. That is the key takeaway here. The Dow down 164, down 0.4%. The 10-year, 4.41%, with the 2-year, 3.85%. Bond yields fell as Fed Governor Christopher Waller reiterated his case for a July rate cut. Gold up $15 the ounce, up 0.5%. West Texas Intermediate crude, little change, down 3 cents now, 67.51 a barrel on WTI. Bitcoin down 1.4%, 117,840 now on Bitcoin. So the Dow, the S&P, NASDAQ trading mixed. Laura Cooper is global investment strategist at Nuveen. And on Daybreak this morning, she told us she does see the stock market advance continuing.
Markets are rallying largely for a trio of reasons. We can think about investor optimism of a strong Q2 earnings season, as well, given what we've seen in recent data, the U.S. economy is just continuing to show the surprising resilience. And then if we look at kind of the S&P 500 in particular, tech leadership continues to drive the way. So there's no sign of any imminent catalyst that could deter this ongoing rally.
Laura Cooper of Nuveen, interview this morning on Bloomberg Daybreak. Sarepta Therapeutics says another patient has died from acute liver failure after receiving one of its gene therapies, putting additional pressure on the biotech company after the recent deaths of 2 teenage boys. Shares of Netflix slumping now. After earnings last night, Netflix down 4.6%. Recapping, the Dow lower, S&P now little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. I'm Lisa Mateo alongside Emily Grafeo. You were listening to Bloomberg Intelligence. Paul Sweeney does have the day off. Okay, so 25-year-old trading powerhouse Jane Street in the glare of a global spotlight. At least that's according to Catherine Doherty. She's Bloomberg finance reporter. Her latest big take story. This one, a lot to dive into, but I want to start by setting the table. Like, who is Jane Street and what sets them apart from other firms out there?
So Jane Street has become one of the largest trading firms in the U.S. and really across the globe. They started out, their founders are from Susquehanna. That's another trading firm that they compete with today. But over the years, they have really developed their technology and their people to generate billions of dollars in revenue. They've grown so large that their trading revenue has surpassed some of the biggest U.S. banks. They're now larger in scale, at least the money that they're making, than Bank of America and Citigroup. So we're talking a lot of money, and they are really behind the scenes. So I like to think about them as they are responsible for the plumbing of the market and making sure that all of the trading is actually just moving through the system. They're handling orders from customers, not directly. Some of it is indirectly. If you have a retail broker, they're the ones that are receiving the order from their clients. That order gets sent to a firm like Jane Street, and Jane Street handles the actual execution to make sure that they're matching the buyer and the seller. They might take the order and then eventually they sell it off, but the middleman player, that's Jane Street. They're the reason that trading can continue. Them and their peers play a very important role in the market structure overall.
There is some regulatory scrutiny right now in India when it comes to Jane Street, which we're going to get to in a second. But you write in this big take that you wrote along with Bernard Goiter that they're famously secretive. Why are they so secretive on Wall Street?
Well, number one, they don't really have to say a lot. This is a private company. What they do doesn't require public interface at all. They're providing a service, and they don't have to answer to shareholders. So many times they would like to operate in the dark in many ways. It doesn't necessarily mean what's going on behind the scenes and what's happening in the dark is nefarious at all. There's just not really a reason to say anything. But what they do is so, and who works for Jane Street is a very particular type of person. They have quants, they have mathematicians, and this is not unique to Jane Street. Other peers like Citadel Securities and Hudson River Trading, they also attract those types of people that go to these firms. But those are not the type of people that are in the business to speak out. And they're just doing their job because they're providing a service. And that service doesn't necessarily need words. It's a lot of really intricate, again, it's the analysis of just how the markets are moving, and they're trying to just be faster and better than their peers. It's all about competition. And they say all of the market makers like a Jane Street and a Citadel Securities would say that competition is a good thing, because if you are trying to be faster, that's going to be a good thing for their customers, because orders are going to be priced tighter. You're not going to lose as much money. And really the reason that the market has evolved in the age of electronic trading in the way that it has is because of these firms.
Now, Catherine, you're a pro. So is there anything that surprised you when you were doing this research for this story?
I would not say I'm a pro at all. Actually, I mean, the reason I enjoy the reason I enjoy reporting on firms like this is I'm learning so much. Sure. And the people that work in the markets, covering market structure here at Bloomberg, I am fascinated by just how niche and how nerdy it goes. So, I mean, I would say what surprised me in this reporting, what surprised everyone on Wall Street was when the numbers were starting to come out of how much money firms like Jane Street were making. It was to surpass the big U.S. banks in terms of trading revenue. That was incredibly surprising, and something that even competitors to Jane would look and say, how are they doing what they do on the scale that they do? And the answer to that in my reporting, and a lot of what this story is about, is the amount of risk that this firm is taking. Now, the reason that they can take so much risk, that's another element to it. It's not as if they're just throwing caution to the wind. They're doing this, and they know exactly how much risk they're able to take. The reason they can stomach the risk is because of the capital that they're working with. That capital, the money that they are putting out there and they're, for lack of a better word, playing with, it's so large and it's all theirs. So if you are a hedge fund, as comparison, that money, you have to answer to shareholders. So if you're taking big risks and it doesn't work out, well, it's not just, oh, sucks for us, that it's really bad for your clients and your customers. Jane Street, that's their capital, so they might take bigger risks because they think there's going to be a bigger reward on the other side. And if it doesn't work out, it's not as if they have to go explain that, or their profit and loss is all their own money. So it's much different than the approaches that the banks and hedge funds take on potentially the other side.
We have about a minute left, and this is definitely a story that I know we're going to be hearing more reporting on from you. But regulators are watching Jane Street, specifically in India. Just give us the high level what the Securities and Exchange Board of India, SEBI, is looking at.
So they're looking at Jane Street's trading behavior, specifically in the options market. The regulator came out over July 4th weekend with an 105-page order outlining what they are alleging is market manipulation. And to not go too far into the weeds, but they're pointing out a few things. The size of the trades that this firm is putting on, and because of the size, the impact to the overall market. And they're claiming that Jane Street's behavior is ultimately harmful to the end investor. So this is playing out. The firm has denied that it is doing anything that is nefarious or would be considered market manipulation. So we'll see what happens next.
All right, Catherine Doherty, thank you for joining us right here in the studio this morning. She is Bloomberg finance reporter. You got to check out that article on the terminal. We've got a lot more coming up here on Bloomberg Intelligence. We're going to be talking with Brooke Sutherland. She's Bloomberg Boston bureau chief. She's author of the Industrial Strength newsletter. We're talking tariffs and all the impact that's having on the markets and on the economy. Speaking of which, let's get right to the markets. The S&P 500, that's little change right now. It's up about 3 points. The Dow down about 152 points, and the NASDAQ up about 26.
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Bloomberg Intelligence Radio here. I'm Emily Graffeo in for Paul Sweeney. He's at the beach today. We also have Lisa Mateo with us. Market's pretty much unchanged, but we're going to talk about industrials right now. We're joined by Brooke Sutherland. She's Bloomberg Boston bureau chief and author of the Industrial Strength newsletter. It comes out 10 a.m. on Friday. Go check that out. But Brooke, let's talk about what you're writing about today, the tariff deja vu, prolonging manufacturing slump. What is the current state right now of manufacturing activity in the wake of Donald Trump's trade war?
Sure, and one of the things that I think is important to remember is that we were actually in a period of manufacturing weakness. One of the longest on record, if you're looking at ISM manufacturing data, and there was a lot of optimism heading into this year that we would start to see more of a recovery, particularly in those parts of the industrial economy that tend to move first when things start getting better or when things start getting worse. But that really hasn't materialized, and part of that has just been the uncertainty, the rising costs that have come with tariffs. And so what we're hearing from industrial companies as we get into earnings season is they're talking about things are still very sluggish, but they're not getting worse anymore. So we're at this sort of sluggish but stabilized level. And that's very reminiscent of what we heard from a number of companies in the wake of Trump's last trade war, which also, dragged the manufacturing sector into a period of real weakness as companies grappled with those rising costs and the uncertainty from his tariffs that back then primarily targeted Chinese imports.
Yeah, I would say you led right into my next question, Brooke. You read my mind. So I'm kind of wondering if you can compare the two, like the on again, off again tariff policy, and then his last trade war. How do you compare the two?
Sure. And, the last one really focused primarily on the industrial economy. They were much more targeted tariffs on a specific range of Chinese imports. And, the administration at the time really took pains to protect the consumer-facing side of the economy. And so many of those companies really didn't feel the pain of the tariffs to the extent that we saw on the industrial side. And what that means is that the industrial manufacturers sort of had to start making changes sooner. And many of them have been adapting in the wake of that last trade war. They've really reduced their reliance on China. They've gotten better at figuring out how to raise prices in a way that doesn't ruffle feathers with their customers, to pass on those rising costs from tariffs. And so they've been here before, and I think that does give them a bit of an advantage as they figure out how we move forward from here. Now, on the flip side, what we're seeing now from Trump is much more sweeping. It's not just China, it's pretty much everywhere on the globe, and everything under the sun is almost affected. And that's forcing a lot of companies that weren't hit quite as hard by the first trade war to really recalibrate and figure out their strategies. And then that also, of course, raises the risk that this trade war weighs on the consumer harder than the last one. And, a lot of industrial companies will try to argue that the manufacturing economy can sort of split apart and stand alone and be really strong, even if we see the consumer side slump. And, history has shown that's incredibly difficult to actually play out.
Yeah, when you talk to manufacturers, these industrial companies, how much do they kind of factor in a consumer that is weaker, that's feeling weaker, into their business decisions?
Not as much as you might think, because many of these companies don't sell to consumers. And so what we've seen over the past couple of years is the industrial sector, the really big manufacturers, have actually moved away from their more consumer-facing businesses. GE, for example, used to sell light bulbs, and they don't do that anymore. Now they just sell jet engines. And so, certainly these CEOs are cognizant of what's happening in the broader economy, but they're really focused on, the more manufacturing side, which is what matters for their business. I think why you see some of this caution in the earnings comments is because they are, aware of what other companies on the consumer side of things are saying, particularly about pressure on the lower income side of the spectrum, but that's not really manifesting yet in the manufacturing world.
So, Brooke, how does all this play into earnings? I mean, we had some pretty good results from tariff-sensitive companies.
We did. I mean, some of that is just math. When you look at what the guidance that companies gave in April, tariff rates were a lot higher than they are now, particularly as it relates to China. And so you've seen companies raising their guidance just because the tariffs didn't end up being as high as what they expected. We've also seen the weakening of the U.S. dollar, which is a big benefit, particularly for global manufacturers that sell overseas. And so just those two dynamics alone have really had a big impact in terms of the profit outlooks and the earnings that we're seeing coming in from industrials.
Brooke, before we let you go, just in the last couple seconds here, Trump has talked about bringing manufacturing back into the U.S., domestic manufacturing. So far in the earnings that we've seen, in the reporting that you're doing, is that shaping up to actually be a reality?
It's difficult to say that that's a real reality, and a lot of CEOs would be very skeptical about the extent to which there will be reshoring in the U.S. Certain kinds of manufacturing certainly will come back to America, areas where they're really more of a national priority, like semiconductors, and even to some extent pharmaceuticals, as we saw during COVID, how important it is to have domestic access to those medicines that are most important to us. But sort of the general manufacturing, I think there's a lot of skepticism over how much might actually come back to the U.S. And even looking at the tariffs that are in place now, what a lot of companies are thinking about is, okay, it doesn't make sense to be in China anymore, but it still might be more economical to be in Vietnam or Indonesia or Cambodia or Mexico rather than the U.S., where labor costs are very high. And there's also a big labor shortage that's really weighing on the manufacturing sector.
All right, Brooke Sutherland, always appreciate your time. She's our Bloomberg Bureau, Boston Bureau Chief. Be sure to check out her newsletter, Industrial Strength. A lot of good insight there. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Well, stay with us. You have your top stories, global business headlines. They're all coming up right here on Bloomberg Intelligence.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Cammie McCormick. President Trump has responded to calls for more transparency in the Jeffrey Epstein case, but Natalie Brand reports there won't be any immediate results.
He's asked Attorney General Pam Bondi to produce any and all pertinent grand jury testimony subject to court approval, which the AG, Bondi, indicated she will seek to do today. Now, that is expected to take time. I spoke a short time ago to a former federal prosecutor who said we could be looking at months, if not over a year.
Trump is also threatening to sue the Wall Street Journal and its owner, Rupert Murdoch. Scott McFarlane has that.
The Wall Street Journal is reporting that there was a card or a letter sent by Trump to Epstein for Epstein's 50th birthday, which had what the Wall Street Journal characterized as bawdy language and references to it, and a drawing of some sort that could have been a naked woman.
The president this afternoon is expected to sign cryptocurrency bills just passed by the House. CBS's Kelly O'Grady.
Just more broadly, the fact that Congress is in a bipartisan way saying cryptocurrency, we actually want to figure this out and make it credible for Americans, that's a big deal.
An Idaho judge lifted a gag order in the quadruple murder case of Brian Kohberger. He pleaded guilty to avoid the death penalty for the stabbing deaths of 4 University of Idaho students at their rental home near campus. Steve Gonzalez's daughter, Kaylee, was one of the victims. He wanted the case to go to trial so he could learn what happened.
By hiding the truth, we're protecting our killers. We have to show the ugliness of what this person did. We're writing our victims' impact statements, and we don't even know what the impact is because they've hid the impact from all of us.
CBS has canceled The Late Show with Stephen Colbert. He will not be replaced. The network called it a financial decision against a challenging backdrop in late night. Matt Belloni is with the digital media company Puck.
The economics simply does not make sense anymore because people are not watching linear television late at night. They are watching the clips from these shows on digital platforms, but the monetization of that content is not the same.
The show will continue through May of next year when the franchise will be retired. Oscar-winning lyricist Alan Bergman has died. He teamed with his wife for hits like It Might Be You and the classic The Way We Were.
The way we were.
The Bergmans provided words and sometimes music for hundreds of songs from Frank Sinatra to Michael Jackson. He was 99. This is CBS News. It's your last chance to claim memorabilia from a popular British drama series. Deborah Rodriguez reports.
Downton Abbey
Abbey fans will be able to bid on props and costumes at a farewell auction in London next month. Among the items going up for sale at Bonhams, the famous bell wall that called servants to duty, a wedding dress Lady Mary Crawley wore in the first episode, and the clapperboard from the movie set of Downton: A New Era. Some of the items will be available for viewing at Bonhams before bidding begins August 18th. The sale is a lead-up to the third and final film based on the TV show Downton, the finale. Deborah Rodriguez, CBS News.
A film of Ozzy Osbourne and Black Sabbath's final concert will be released in theaters next year. It will be called Back to the Beginning, Ozzy's Final Bow. It's a 100-minute documentary. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The Jeffrey Epstein story is not going away for President Trump. Welcome to Balance of Power. I'm Kaylee Lines alongside Tyler Kendall in Washington. Thanks for being with us on Balance of Power here as we continue to follow a story of President Trump under increasing pressure from within his own party, within his own base, for more transparency around the case of the late convicted sex offender Jeffrey Epstein. President Trump now authorizing the Justice Department to seek the release of grand jury testimony from the prosecution of Epstein, as we have new reporting from the Wall Street Journal that suggests Trump sent a suggestive letter to Epstein for his 50th birthday. But Tyler, of course, President Trump is pushing back on that report.
Right, pushing back, but still big questions on what this authorization would actually glean, what details we would get, because it's unclear if a federal court would even grant the administration's request to make the public grand jury deliberations. That's really what's at the center of this public, because that's typically kept secret.
Yeah, there's a lot of legal questions here that we're going to get into with our colleagues in just a moment, but obviously massive political questions as well, because this is exposing divisions within the base of support that the president has always relied on, and many of them are unhappy with his handling of this case at this point.
It's also put the Vice President, J.D. Vance, in perhaps a tricky position, since he had previously been pretty outspoken on this issue and was chosen in part for his populist right roots that really are raising concerns about how the administration's been handling this.
Yeah, so this story obviously is dominating Washington. Not sure it's moving markets, though, so let's get a check on what is moving markets today with an eye on Wall Street and turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Wall Street Pharaoh focused very much on the beach. We got a whole lot of nothing going on right now. With the Dow, the S&P right now both in the red. Little change, though. That is the key takeaway at midday on the S&P right now, down by 0.5 point. NASDAQ up 15, gain there of 0.1%. Bond yields fell alongside the dollar as Fed Governor Chris Waller reiterated the case on Bloomberg for a July rate cut. Stocks fluctuating as traders parse a handful of earnings. Again, the S&P lower, little change, down by 1 point. We've got the 10-year 4.41%, the 2-year 3.85% right now. Gold is trading higher by $16 the ounce, $33.54, up 0.5%. West Texas Intermediate crude, little change there, up 6 cents a barrel, $67.60, up by under 0.1%. Lori Heinel is Global Chief Investment Strategist at State Street Investments, and on Bloomberg Open Interest this morning, she talked about the market backdrop.
Certainly, a lot of the risks have really passed. I mean, that crisis moment in trade has passed. That's given a little buoyancy to consumer confidence. Labor markets are still pretty strong. Earnings growth is coming in pretty good. And it seems as though between the balance of how tariffs are evolving and how companies and consumers are navigating that, we're kind of getting behind what we saw in the March-April period.
Lori Heinel interviewed on Bloomberg Open Interest. Netflix lower after earnings, down now by 4.5%. So again, recapping, little change for the U.S. equity market at midday. S&P 500 index, I'm calling that flat. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Back we go to Washington. Balance of Power continues right now. Once again, your hosts, Kaylee Lines and Tyler Kendall.
All right, Charlie Pellet, thank you so much. A sleepier day than usual on Wall Street on this summer Friday, but not necessarily a sleepy day when it comes to politics here in Washington. Certainly when it comes to a story that has been dominating the headlines over the course of the last week and change, President Trump under increasing pressure from his base around the case of disgraced and convicted sex offender Jeffrey Epstein, who of course died in prison years ago. A sequence of events happened yesterday. First, of course, a Wall Street Journal report was published alleging that President Trump, before he was president, sent a suggestive letter to Jeffrey Epstein for his 50th birthday. The president calls that letter fake and is threatening to sue the Wall Street Journal over that story. But after that story was published, Tyler, he has now authorized the Justice Department to ask for courts to release the grand jury testimony from the prosecution of Epstein, seemingly acquiescing a bit to some of this mounting pressure.
Right, and it's probably worth pointing out that the Justice Department and the FBI last week said that Epstein did not keep a client list and that no more files related to the case would be made public. And that's where we want to start today's segment, bringing in some of our Bloomberg News reporters and editors, Wendy Benjaminson, Bloomberg senior editor, who's live with us here in our D.C. studio, and Ava Benny Morrison, Bloomberg News legal reporter. Ava, I want to start with you because there have been various efforts in the past to get Epstein-related documents unsealed. Is this time going to be any different? What are we actually expecting to get out of this authorization that the president has appeared to grant?
Look, it's certainly not going to be easy. There will be a number of legal maneuvers that the Justice Department or Bondi's office have to jump through. What happens in the grand jury room is traditionally sacrosanct. It's not as easy as asking a judge to unseal troves and troves of testimony that was given during those secret proceedings. We're talking about potential victims, witnesses, making claims that may have been unsubstantiated. So even if the Justice Department makes a move to have some of these materials unsealed, I expect it's going to be a very lengthy process.
Well, so if the process takes a long time and might not have the end result that some of the president's supporters who are pushing for more transparency around Epstein would want to get, Wendy, is this just giving the president cover essentially to say, well, at least I tried?
It is, and it is a fig leaf, and it's about the size of a fig leaf, because the other files, the ones that Pam Bondi said, we now believe this not to be true, the client list that was on her desk, that now she says, no, it was just the files that were on my desk. In those files, not only is grand jury testimony, but it's witness interviews. It's Ghislaine Maxwell, his partner's phone records, and she wore a wire at a time. So there are those transcripts. So there's, for the people who really, really want this to come out, this is just the tip of the iceberg, and probably will only, when it's released, only create appetite for more.
Right, so Ava, to actually build off that, when Pam Bondi did release some of these files earlier this year, it was considered to be a letdown for many conservatives that were seeking more information here. Can you just put into context just how much information these opponents that want to get more, how much are they looking for? Like, what's ultimately some of the end goals here from the people that want to see additional files released?
There's certainly been feverish interest in anything to do with Jeffrey Epstein, and a feeling, particularly among Trump's conservative base, that there is information the public doesn't know about, and they do deserve to know about it. But over the years, through various criminal cases, as Wendy had mentioned, involving Ghislaine Maxwell, Jeffrey Epstein himself, and civil litigation involving the victims of Jeffrey Epstein, we have seen dribs and drabs of information come out that have given us a bit of a insight into the breadth of Jeffrey Epstein's network, who he spoke to, who he associated with, and even people who have been accused of participating in some of his crimes. So I think, you know, the recent calls, what people are really after here is this so-called client list. And as you mentioned, the statements coming out of the Justice Department and Bondi's office that this client list doesn't exist. And it seems to be a little bit of a red herring. And certainly from the people that I've spoken to who have been involved in these cases for many, many years, there is no client list. So I don't know exactly what they're hoping to get out of this grand jury testimony. I would also note that there will probably be a number of objections from people who participated in these proceedings and went in thinking that their testimony was going to be kept secret.
That's a good point. Wendy, I want to return to the point you were making about what could be done to appetite if they're given a taste of something more. They may just want even more information, and this is a story that could keep feeding into itself. President Trump, as we know, is a master of cultivating the narrative he wants to talk about, making sure we're not talking about things he doesn't want to talk about. That is not true this time. And I wonder what you think that tells us.
Well, you're absolutely right, Kaylee. He can always adjust the flow of news to suit his agenda. The problem in this case, though, is that there are things that are helping him now shape that narrative. So it may not be the horror that it seems to be for him right now, or that he would lose his base. Because right now he has rallied a lot of MAGA supporters against the Wall Street Journal for the story they had last night, saying it was fake news, as you pointed out. And then also, it's the Democrats trying to seize upon this. And if I were a Democratic consultant, I would say, don't help. There is a long-standing political adage that if your opponent is drowning, let him. Like, don't jump in to help, because now MAGA world can say, oh, it's the Democrats who want it. I don't want to be aligned with the Democrats.
And that's what President Trump is saying. If Democrats have such a big
Exactly.
problem, why didn't they release the files during the Biden administration?
Exactly. So they're feeding into helping him sort of take the narrative back. But it won't be solved by the grand jury testimony, but it may solve itself in the end.
Well, I'm wondering how you also think Congress is now potentially playing a role in this, as they're trying to get lawmakers on the record to vote for the full files to be released, and you have that sort of becoming a bipartisan movement, right? Ro Khanna teaming up with Thomas Massie, who yesterday told reporters that they don't want to let the pressure up.
That's true, they don't. And I don't know, however, if you can get 216 Republicans or 219 Republicans to agree to it. And Mike Johnson and J.D. Vance, of course, will put a big full-court press on them to back off that effort. But we'll see what happens.
Well, and legally speaking, Ava, how much can Congress actually control the conduct of the Department of Justice from here, and what information actually will ultimately be released? How do we think about the power dynamics between these two branches of government?
I think it really comes down to what is allowable under federal law, and it will be the ultimate decision of a federal judge whether he or she decides to unseal this material. This is certainly a rare occurrence. You don't often see the Justice Department going to a federal judge and saying, can you please unseal what is meant to be secret grand jury testimony. So I think that, I don't know how much weight Congress will play here because the judicial branch is completely separate, and it will come down to what is allowable under federal law and the decision of a federal judge.
Well, Ava, just to put a bow on this in our final minute, I know that you have noted that some evidence was successfully unsealed in a Florida state case. Can you just give us a little bit more background here on what successfully has come forward already when it comes to this case?
Sure. So this was a little bit different because it was a county case in Florida involving allegations that Jeffrey Epstein had engaged with child prostitution, and there were some records that were unsealed successfully there last year, and involving grand jury testimony of people that worked in Epstein's Palm Beach house down there. So that is an example of where it has been successful, but I don't think we can apply the same model here because they are different jurisdictions.
All right, Ava Benny-Morrison, Bloomberg legal reporter, and Bloomberg senior editor Wendy Benjaminson joining us on what is an incredible story dominating the narrative here in Washington. Thank you both so much. And we'll have more ahead here on Balance of Power as we turn back to the fate of Jerome Powell. A conversation with Christopher Waller ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got red on the screen right now with the Dow, the S&P, NASDAQ all declining on this Friday midday. Right now, the S&P lower by 3, drop there of just about 0.1%. The Dow down 202 points, down by 0.5%, while NASDAQ, we'll call that flat on the day. Bottom line here, we got the S&P 500 index hovering close to record 62.93, where the index stands right now. The 10-year at 4.41%, with the 2-year 3.86%. Gold is up $15 the ounce, up 0.5%. West Texas Intermediate crude flat on the day, 67.51 a barrel. And Bitcoin, as we wrap up crypto week, Bitcoin down 1.5%, 117,695 on Bitcoin. Bottom line here, stocks fluctuating as traders parse a handful of earnings. American Express's Build business and its cards and other products outperformed expectations in the second quarter. American Express shares, they are down, though, by 2.7%. Also out with earnings this morning, Charles Schwab advancing 2.1%, and shares of Ally Financial after earnings down by 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyons.
All right, Charlie Pellet tracking financial markets for us. Thank you so much. Markets, of course, having to keep track of many different narratives. One, of course, being fundamentals in the earnings story. Others being political considerations, including, of course, the political pressure that is mounting on the chair of the Federal Reserve, Jerome Powell, and whether or not his future is uncertain and what it means for the future of monetary policy. As we consider monetary policy's most immediate future, with the Fed having a rate decision coming up later on this month, at least one voice is suggesting that at that decision, they should decide to cut rates. Fed Governor Christopher Waller making the case for a July cut on the grounds of supporting the labor market, one side, of course, of the Fed's dual mandate. He first made that claim in a speech last night, and he also joined our colleagues on Bloomberg Surveillance to reiterate his points earlier this morning, even suggesting he'd go as far as to dissent at this month's meeting. Let's listen.
Well, I never want to commit to an action before the meeting. Otherwise, if everybody committed before, you don't even need to have the meeting to have a discussion. So the goal is to always go to the meeting, sit down, listen to all sides. People will try to convince me of their view. I'll try to convince them of my views. And in the end of the day, you make a decision on what you think is the right outcome and the right data, how the data is coming in. And right now, I laid out my case last night. I don't think I could be any more clear, I hope, as to what my position is and why I think we need to do this. It's just how I read the data and how I think about going forward, how you respond to anything that involves tariffs.
There's a lot of politics in this decision coming up, more than usual. And I'm wondering, Governor Bowman has also suggested she would prefer a rate cut in July. If two of you vote for a rate cut, if two of you were to dissent, would you worry about the market reaction to that?
You know, one of the things that has always bothered me since I took this job is the criticism that we are nothing but groupthink. All the meetings are the same. Nobody dissents. Nobody does anything. And I think this is healthy. I think this is a turning point in the way we want to think about policy. Some people don't want to cut, some do want to cut, but coming out and making the case either side, that's good, healthy debate. Otherwise, if we're always going to do the same, the joke is, why don't you just have one person set policy and send the other 18 FOMC members home? So this is healthy. I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussion about where policy should go. It doesn't mean anything about politics or anything else. It's make the economic argument and then see if you can convince others to go along with you. And that's all I'm trying to do.
We totally agree with you, for the record. We were sick of the groupthink, and it's good to have dissent.
Yeah.
Mike essentially is asking if you will dissent at the end of this month. Is there value in dissenting on the FOMC?
Well, I mean, it's often the case that you dissent if you make it very clear you think at this moment in time this is an important thing to do. If you were to go in and do kind of a jihadist, I'm going to dissent at every single meeting no matter what happens, then you don't even have to show up. Everybody knows what you're going to do. So it is important to make sure that if you dissent, you do it carefully and you have the right reasons, and it's not going to turn into a serial dissenting potential case. I mean, that's how I take my job seriously and responsibly. So I only would think about doing this. I dissented on the balance sheet slowdown earlier this year because I felt like that was not needed. And that's kind of the situation we're in now.
Chris, if you do cut, the markets will go one way. If you don't, they'll go another, perhaps. How critical is it to get to a rate cut fairly quickly? You've mentioned the danger to the labor market, but if you do wait till September, is that going to be too late?
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks? That's exactly the thing. It doesn't kind of matter. Just start thinking about, do I want to wait and risk something happening? This is what we saw last summer, by the way. We left July, we left rates, and then boom, we got a very weak, bad labor market report. The unemployment rate jumped 0.2. Payrolls went way down from where they were, and people were screaming at us last August, you guys should have cut in July. So 1 month it always is 1 month. Just remember that, it's just 1 month. But we live in a world in which we have to respond to real-time data to kind of sense of where the economy is going. And I've always said, if you worry about long and variable lags, which everybody always talks about, the whole point of that is to get ahead of it, not wait for it to happen, and then take a policy action that takes quarters or months down the road to actually have any impact.
The new worry is tariffs. We've just had a 6-minute conversation with you about monetary policy. You've built a case for lower interest rates, and no one's talked about trade or inflation. 2 assumptions in your speech yesterday, and I think they're important assumptions. A large share of tariff increases won't be passed through to consumers. Any increase would fade over the next year or so. What data underpins that conclusion?
Well, one, it's just economic theory. So you put on a tariff, as long as it's a one-time tariff and that's it, that's a one-time price effect. I mean, this is economic theory. You could not get in any serious economic model persistent inflation from that. You would have to cook up some other amplification mechanisms, and that's what people talk about. Wages will start going up and everything will get out of control. You're not seeing that at all. This is just not. Those kind of amplification mechanisms or wage price spirals aren't happening. Tariffs are a tax. And in public finance, you learn that you may levy a tax on a firm, but who bears the incidence or the burden of that tax? It can be a group of people or one person, not necessarily the firm. So this is what I've heard from a lot of firms. If there's a 10% tax, they'll force their suppliers to eat some of that cost. Workers may eat some of that cost in terms of less hiring and things like that. The firm will take it out of their profit margins. And then lastly, some of it will get passed on. And as I mentioned last night, I've heard this for months now. Like the rule is 10%, it's roughly, rule of thumb is a third, a third, a third. Suppliers will eat a third, firms will eat a third, consumers going to eat a third of that tariff. So if you eat a third of it and it's 10%, like I've been arguing, this is like 3/10 of a, 3/10 on the inflation rate for a few months, and that's it. And it'll persist if you do 12-month over 12-month. That base effect will not go away for a while, and then it'll just drop off a cliff. So that's why I've been arguing you want to look at like 3 months and 6 months to see if these tariff effects pop up and then go away.
That was Federal Reserve Governor Christopher Waller. The headline there, he hinting that he would dissent if his colleagues voted to hold interest rates steady at the July FOMC meeting later this month. He was joining our colleagues on Bloomberg Surveillance this morning, including our Michael McKee, Bloomberg International Economics and Policy correspondent, who joins us now from Idaho. Mike, obviously, as you mentioned in one of your questions, there's now this political aspect hanging over the FOMC's next decision. You also sat down with Mary Daly yesterday, too, president of the Federal Reserve Bank of San Francisco. What's the consensus that you're hearing from Fed officials as the White House's rhetoric really ramps up?
The Fed is not going to cut rates at the end of July meeting on July 30th. Most members have made that plain that they're not voting for it. And we go into the blackout period tonight, so we won't hear anything more from them. And it's unlikely we'll get any kind of data or anything that will change their minds between now and the end of the month. The political question becomes, of course, what does Governor Waller do? Because he's considered a candidate for to replace Chairman Jay Powell. if he wants to be Fed chair, there is pressure on him to dissent because the president values loyalty above all else. And so if he doesn't dissent, one might think that President Trump would reject him. The other issue is if he does dissent, and perhaps Michelle Bowman, who has also expressed a preference for July, also dissents. We haven't had two dissents like that from governors in several decades. So that could be an issue in terms of Fed credibility, start people on Wall Street talking about big divisions at the Fed. So it's going to be a very difficult and narrow path for Waller to walk on the 30th, and we'll have to see how far he'll go.
Well, and I thought it was interesting that Waller himself pointed to the fact that it's the entirety of the Federal Open Market Committee. And if they all are supposed to always have to agree with each other unanimously, it might as well just be one person making the decisions, which arguably might be how one could read the administration's focus on Chairman Powell, like he alone can control the direction of interest rates. But it does speak to the idea that even if you remove Powell from the equation, even if someone like Waller becomes chair, there's not necessarily going to be a consensus to keep easing, even if Waller would want to push in that direction.
Oh, that's absolutely correct. And it's been kind of surprising to people on Wall Street and economists around the country that the president doesn't seem to understand that he thinks he can jawbone Jay Powell into doing something on his own. And that's one of the issues for whoever becomes the next Fed chair. The president may be expecting somebody to walk in the door and start cutting interest rates, but the 12 voting members of the Open Market Committee are going to have something to say about that. And so it's unlikely that the president will necessarily get what he wants, as Chris Waller pointed out. What Waller does want, I think, and what he could encourage as chair is perhaps more dissents. The idea that members make their feelings known and the public gets a better view of what the internal debates are. We get something in the minutes, but they are whoever is speaking is not identified, and they refer to them as groups of several or some, things like that. So that might be something that Waller is talking about doing down the road, is encouraging more dissents and more people to take firm positions, even if they disagree with the chair.
All right, Michael McKee, Bloomberg International Economics and Policy Correspondent, still reporting for us from Idaho. Thank you so much, and a great conversation with Fed Governor Christopher Waller earlier today. I do want to make mention of some headlines that have just crossed the Bloomberg terminal coming from the Financial Times. The FT reporting that President Trump is pushing for a 15 to 20% minimum tariff on all EU goods, and we're seeing stocks kind of right around session lows off the back of that, though we're only down about 0.2% on the S&P 500 right now, keeping in mind, of course, that President Trump less than a week ago sent a letter to the European Union saying if they don't reach a trade deal by August 1st, a 30% tariff would be implemented. The FT reporting that the administration is looking at a reciprocal tariff rate that exceeds 10%, even if a deal is reached. We'll continue to keep you updated on that story, and we have much more to come here on Balance of Power on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red right now. In fact, worst level of the session for the S&P, down 8. S&P 500 index currently trading at 62.89. A drop there of 0.1%. The Dow down 232 points on the Dow, drop of 0.5%. NASDAQ falling from a record, down 21, drop there of 0.1%. So bottom line, yes, a down day, but the S&P still holding close to a record again. It is now lower by 0.1%. Bond yields fell alongside the dollar as Fed Governor Christopher Waller reiterated his case for a July rate cut. 10-year 4.41%, the 2-year 3.86%, and the 30-year 4.98%. Gold up $16 the ounce. The precious metal higher by 0.5%. A retreat for crude down 0.2%, 67.40 a barrel. And Bitcoin right now down 1.3% at 117,928. Fed Governor Christopher Waller on Bloomberg Radio says worries about hiring in the private sector have driven his call for the central bank to cut rates this month.
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks?
And in that interview, Waller was also asked if he would take the job as Fed chair.
Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it.
Fed Governor Chris Waller interviewed on Bloomberg Radio. Again, recapping stocks lower, S&P down 5, drop there of 0.1%. After earnings, Netflix down 5.1%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyons.
All right, Charlie Pellet keeping track of markets for us from New York, checking on all the asset classes, crypto included. Thank you so much. On crypto, interesting to see Bitcoin actually down a little more than 1% today. As Charlie mentioned, we're hovering around the $118,000 level, even as crypto in Washington is taking a massive step forward today. Of course, after the passage yesterday of the Genius Act in the House of Representatives, having already passed the Senate, it now is going to be on President Trump's desk for a signing ceremony later this afternoon. It's actually slated for roughly 2 hours from now, 2:30 p.m. Eastern time. Going to be a very big moment for the crypto industry, yes, Tyler, but it's also another big moment for President Trump, another legislative victory that he can put down on his accomplishments list. He wanted this of Congress.
Right, he wanted this of Congress. It is actually one of 2 legislative victories that we saw this week come out from the U.S. Congress. The other is what's known as the rescissions package. This is that lawmakers are now clawing back about $9 billion worth of previously appropriated funds. It's going to impact public broadcasting dollars. The bill also ends a swath of foreign aid projects and closes the U.S. Institute of Peace. And these legislative victories for the White House is where we want to start with our political panel. Today, we're going to bring them in. Rick Davis, partner at Stone Court Capital and a Bloomberg Politics contributor, and Christina Greer, associate chair for the Department of Political Science at Fordham. Rick, I want to start with you and talk about this crypto bill, the Genius Act, which has been passed into law. President Trump is holding this big signing ceremony today at the White House. But I'd love to get your take on how members of both parties are really capitalizing on crypto becoming this political force.
Yeah, look, I mean, the crypto industry spent $100 million in the last election cycle, getting their friends elected to Congress and the White House. That is a powerful force moving through the political movement today, and there are a lot of members who want to get on that bandwagon, and not just because they see this much money being applied to the political system, but they probably hear a lot when they come home from their constituents about crypto. And there's no question, when you look at the survey data, people want some kind of a regulatory framework around crypto so that they can feel like they belong to the financial system. So I think this is sort of declaring obvious. Maybe it's been a long time in coming, but the fact that President Trump can sign this into law, he's making a lot of people happy and not really making too many enemies.
Well, as we consider the bipartisan nature of this as well, Christina, there were 78 Democrats who voted for the Clarity Act, a separate market structure piece of legislation that still has to get through the Senate. There were well more than that voted for the Genius Act. This was an area of bipartisanship we saw on display yesterday. The rescissions package that Tyler mentioned, however, was decidedly not so. That is once again, party line, just as budget reconciliation was earlier this month. What does that signal about the chances of any further bipartisan compromises moving forward, especially on appropriations as we approach the end of the fiscal year?
Yeah, I think we need to take it on a case-by-case basis. I mean, as Rick said, crypto is very attractive to both Democrats and Republicans and their constituents. And because it's still relatively new to a lot of voters, there is a desperate need for regulation. And I think that, members of Congress are trying to bring back to their constituents that they're actually on the right side of history and trying to make sure that some of these levers of power are in check. We did see also, though, with Donald Trump during his first iteration as president, he was wholly disinterested in the legislative process. He much prefers executive orders. This time around, he actually does want some big legislative wins. And this latest, financial package that goes straight down partisan lines for the most part really does show the fissures within the two-party structures. This, clawing back of $9 billion for PBS and public radio in communities that Republicans serve. And so it'll be really interesting to see when this goes into effect, if it does finally go into effect, how Republicans are going to go back to their constituents and justify some of these changes that have been made. Internationally, a lot of voters don't always think about international politics. They really do think about their own pocketbook issues. But I think we are seeing in some of the public opinion data that both Democrats and Republicans do see a need for this soft diplomacy, as we call it, making sure that individuals from other nations have access to resources that ultimately we pay for. And those are seemingly off the table more and more with this particular administration. And Republicans are voting in line with their party, even if they are talking behind closed doors that they're not exactly happy with what's going on.
Well, Rick, to build off of this, we did see some Republicans come out and say that they did have concerns with this rescissions package. And I think it's fair to say that this $9 billion is considered to actually be a drop in the bucket, if you can believe it. It's not a huge package, but we did hear from the OMB director, Russ Vought, who said there's going to be more rescission packages coming. How is this going to come down for Republicans when it comes to supporting the administration's goals here? Is this going to be a significant issue, or is this a different sort of path when you see other Republicans fall in line against perhaps what has been billed as bigger legislative achievements like the One Big Beautiful Bill?
Yeah, Tyler, I think this is going to be a topic we talk about a lot on Balance of Power throughout the course of this year, because Russ Vought says he's got, basically $150 billion that DOJ has identified that he wants to put into various rescission packages. And this package was designed to be the easiest one they could get through to show that they could actually pass a rescissions package. And it barely made it through the United States Senate. By 2 U.S. senators would have tanked the bill. So there's more hard work for this administration to do if they expect to get more rescissions done. And that being said, we are entering the appropriation cycle. And so you have appropriators who have appropriated that money that just got rescinded. And they are trying to do a bipartisan appropriations process, which you have to have because you need 60 votes to pass that appropriations. And the only way they can get it was the cooperation of Democrats who now see their policies that they have gotten through other budget years gored by this administration, and an expectation that more will be coming their way. So how do you get an appropriations bill through that you need to have bipartisan support for if you're in the process of rescinding the projects that many Democrats consider sacrosanct? I think it's going to be an incredibly challenging year, the year before a midterm election.
Yeah, which means it's probably going to be a pretty stressful month of September as we look ahead to the appropriations process. But of course, it was also a pretty stressful month of June as Republicans were racing to get the reconciliation bill through, as Rick was pointing out, by literally squeaker margins by the president's July 4th deadline. They, of course, were able to do so. The question, Christina, is how the American electorate actually is receiving that effort. I want to point to some new polling from the Associated Press and the NRC Center for Public Affairs Research. It finds that about 2/3 of U.S. adults they surveyed expect that new law will help the rich. 6 in 10 think it will do more to hurt than help low-income people, and about half think it will do more harm than good for middle-class people and people like them. Is that evidence that the Democrats are winning this messaging war so far?
I don't know if they're winning. Let's be clear. The Democrats aren't great on offense or defense. So we'll see if they can pull this through all the way through the midterms. But, the way the Republicans have built in certain protections for themselves is some of these draconian policies won't take effect until after the midterms. So they'll say, Democrats are ringing an alarm, but you haven't felt anything as of yet. What is incumbent upon the Democrats to do in diverse electorates is to articulate what will come down the pike. Even if people haven't felt it just yet going into the midterms, they will most definitely feel it afterwards. And so having, we know that voters go to the polls based on economic and pocketbook issues, really explaining to them what these cuts in Medicaid will look like, really explaining to them what these cuts in various jobs in the government sector will look like for them and their communities. And that is an economic issue that people can wrap their minds around when it comes to them personally. When we talk about this amorphous thing called the economy, it's very hard for people to fully see where they fit in, and you can always say it's about others. But when you can walk someone through, and so many provisions in that big, beautiful bill that were passed are contradictory to a lot of the Republican purported values, right? They say they want smaller government, but there's trillions upon trillions added to the national debt, and there's so many things that will be taken away from the American public. So if Democrats can't take this ball and run it across the finish line, I think that says more about the Democratic Party than the policies themselves. But there's so many things that are baked in where a lot of Americans won't fully feel it until after the midterms. And so it's a projection conversation that Democrats will have with some voters in particular areas of the country.
Well, Rick, I'd love to get your thoughts on why this bill might not be resonating in the polling that we've seen so far, because we got Michigan consumer sentiment, the gauge today for July, and it came in above estimates. And I know that you track this gauge pretty closely. What should we make of how consumers are reacting to the White House's policy? Because this was a pretty good week in terms of economic data.
Yeah, I really love the Michigan Consumer Sentiment Index as a political finger in the wind, and it makes me so happy that on a Friday I get to talk about it. So thank you.
Doing it just for you, Rick Davis.
You're the best. The markets were the readings were flat from June, but I want to remind everybody since December of 24, this is still 16% below where it was then, and it's because people are concerned about inflation. And we hardly ever talk about inflation. We talk about interest rates. We talk about trade. We talk about reconciliation, tax cuts, budget cuts, rescissions. But we hardly ever talk about inflation. Yet it's the one thing consumers care most about. In fact, they specifically asked consumers in this Michigan Consumer Sentiment Index for July, tell us what you think about the budget cuts or the cutback in the federal government spending. And they said, that doesn't affect us very much. What affects us is inflation. And because of the concerns that these consumers have about the sort of on-again, off-again tariff policy, they say they are still fearful that inflation will go up in the future. And that tells you a lot about how people feel about the economy in America today.
Well, and it comes, Christina, as President Trump is actively pushing the Fed to lower interest rates, something that actually could, in theory, or at least the Fed fears, translate into higher inflation, allowing inflation to get out of control. Is the president reading the needs of the American people economically incorrectly? He thinks they want lower mortgage rates, but really it's less about that and more about what they're seeing in prices everywhere else.
Yeah, I mean, we know that, if you look at the financial history of this particular president, I'm not fully confident that he understands money, to be very honest, if we look at his various bankruptcies. And so he hasn't been one who's been thinking about poor people or middle-class people for the vast majority of his life. So this, to me, is not surprising that, he would have some sort of fiscal policies that adversely affect millions upon millions of Americans. There's so many people, we saw it when he and Joe Biden initially were campaigning, who really wanted to talk about how they felt when they went to the grocery store or the gas pump. So many people cannot buy homes, absolutely, but in their everyday lives, as you said, are really thinking about how to survive, and especially as it seems as though jobs are decreasing in so many different sectors across the country. So this will actually hurt the American people, and it'll be curious to see how his party frames it, since, like schools of fish, they have to sort of follow the president based on his various economic whims. And I don't know how, as we get closer and closer to November of 2026, how they'll be able to justify when people go to the polls, they will be asked the question, Are you feeling better off now than, say, 2 years ago? And I don't know if many Americans will be able to say that they are.
All right, Christina Greer and Rick Davis, our political panel today, thank you so much. They'll be back for more in the second hour of Balance of Power, which starts just a few minutes from now, so stick with us. I'm Kaylee Lyons alongside Tyler Kendall. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump makes a move in the case of Jeffrey Epstein. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Tyler Kendall in Washington, where the conversation has been dominated by controversy surrounding the release of information related to, of course, the convicted, now late, sex offender Epstein. President Trump now asking the Department of Justice, or authorizing them to ask a court to release some files related to Epstein. The question, of course, is will that be enough to assuage his supporters who want more transparency around this. And of course, Tyler, it comes after a Wall Street Journal report hit yesterday alleging that President Trump once sent a suggestive birthday letter to Epstein. The president says that letter was fake and is threatening to sue the Journal over that story.
Right, and we should say the paper declined to comment on the president's litigation threat. Another big question here is whether or not the federal court would actually grant the administration's request to make public grand jury deliberations, because this is usually a pretty secretive process.
Yeah, and of course, all of this is not what President Trump wants to spend today talking about. He's been pushing back heavily against the idea that this keeps coming up. He's hoping to shift focus perhaps just about an hour and a half from now as he's getting ready to sign into law the Genius Act, piece of legislation that will regulate stablecoins in the U.S. There's going to be a big ceremony with all the pomp and circumstance at the White House at 2:30 p.m. And we're actually going to speak with a congressman from the Financial Services Committee who cares very much about this effort when it comes to crypto regulation. Congressman Bill Huizenga is going to be joining us shortly.
Right, this is considered to making its way through the Senate next.
Yeah, you still got to get through the upper chamber. So we'll keep track of all of those stories for you this hour, just as Charlie Pellet is keeping track of financial markets on this Friday. So let's check in with him now from New York. Hey, Charlie.
Hi, thank you very much indeed. Keeping track of a his case for a July rate cut. So here's where we stand. We begin with the equity markets. S&P down 10 now at 62.87. Drop there of 0.2%. The Dow lower by 246. Right now, Dow Industrials down 0.5%. And we have got NASDAQ down 30 for the NASDAQ Composite Index, a drop right now of just about 0.1%. Our Mag 7 Index saw on a down day for the rest of the market is gaining 0.3%. 10-year 4.41%. The 2-year 3.85%, the 30-year 4.98%. Gold is up $14 the ounce, $33.53, up 0.4%. A retreat for crude oil down 0.2%, $67.39 a barrel. And Bitcoin, as we wrap up crypto week in Washington, down 1.5%. Right now, we've got Bitcoin 117,628. Netflix lower after earnings. Netflix shares they're tumbling now by 5.1%. And balance of power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyons.
All right, Charlie Pellet checking on the markets for us. Thank you so much. On this Friday here in Washington, we're still talking about the very story that President Trump was initially hoping we wouldn't be talking about this entire week, and yet that's how it's played out as members of his own base of support push for greater transparency around material related to the case of the late convicted sex offender Jeffrey Epstein. Of course, President Trump is now asking the Attorney General Pam Bondi to move forward and asking a court to authorize the release of some grand jury information. But it comes after a report in the Wall Street Journal last night alleging that President Trump, before he was president, once sent a suggestive birthday letter to Epstein for his 50th birthday. The president has called that story false, malicious, and defamatory. And as we've mentioned, Tyler is threatening to sue the Wall Street Journal, its parent company, and in fact, Rupert Murdoch over it.
Right, exactly. And the paper did decline to reply to the litigation threat, but we really have started to see some of his supporters perhaps get behind this idea of fake news and attacking the media over this report. But there are still a lot of people out there that want to see some more information released and get some of these questions answered, which is where we start now with Bloomberg senior White House reporter Josh Wingrove, who's joining us here in our D.C. studio. Josh, can you just put into context for us, because it doesn't seem like this issue is going away for President Trump. How big of a political liability at the moment does the White House view this?
Well, the broader Epstein thing, I think, is still sort of a wildfire that is risking, consuming a lot of parts of the MAGA base. But the story maybe is a double-edged sword, right? Because right now the White House is trying to seize it as a rallying cry. Look, fake news. The president is being pursued again by the media and trying to sort of steer attention that way. But so far it hasn't worked. I mean, Trump has tried a lot of things to steer attention away from this. It just hasn't been successful. And you have allies like Charlie Kirk and others who are saying that this case is sort of like part and parcel with all his base's concerns about the deep state and these hidden theories and whatever, including, we should probably call them conspiracies at some end of the flank. But that is why they're so upset. They thought that they would get clarity from Trump on this. It's not coming out, so it's less that they are worried that he himself might be involved in it, which of course is the sort of question raised by this journal story, just how close was Donald Trump with Jeffrey Epstein. But more the broad question is they felt that essentially that they were sold a bill of goods, and they, want those goods, and they're not getting them so far. So we'll see. Right now, it's unclear. Remember, of course, there's been questions about Pam Bondi's future. Right. Trump has really stood by her. I find it personally difficult to see how he would do anything but that, because it just doesn't make sense that she'd be acting solo here. I mean, she's in lockstep with the president on this. So, we don't know where it will go, but this has divided the mega base in a way that we have not seen at all, anything close to this in the second term. Yeah. But it's also, early to say how it'll play out.
Yeah. Well, and when it comes to Pam Bondi, she's saying she'll do as the president has asked, and authorize the DOJ to seek release of this grand jury testimony. But seeking it and actually getting it released are two very different things, Josh. So is this enough to lower the pressure for now?
Well, and if it's not released, or if only partially released, that could fuel beliefs that this is part of some grand cover-up. And, Trump loved to stoke this. I mean, he has drawn a lot of political energy from questions about who knew what about Epstein and who was involved with him, and where was there a client list. This was a tailwind for Trump, and now, of course, it's potentially backfiring on him with people wondering why they're not getting the documents that they have. Democrats have a tough road to walk here. There are so many other things happening this week. I mean, I don't know. Happy Friday, I think. Is it Friday? What day is it?
Thank God, yes, it is.
Right. Democrats would like, in some ways, this is like a potent thing that is ripping apart proverbially the mega coalition. On the other hand, Democrats would love to draw attention to some of the other things Trump is doing, including the bill passage earlier this month, of his big, beautiful bill, and some of the tax cuts therein. And remember, it was only like this week that Trump is, really ratcheting up his war with Jay Powell. So a lot of moving parts here right now.
Well, to build on that, let's talk about some of those actual legislative victories that the White House did see this week. The $9 billion rescissions package, also this crypto legislation, the Genius Act. President Trump has a big bill signing today, in a short time, actually, at the White House. What do we know about how the White House is trying to capitalize on those headlines instead? Yeah,
they're very excited about that rescissions package as well, because, of course, it looked a little bumpy there. They had to tweak some of the stuff around PEPFAR. And Trump is due to dine with Republican senators tonight. So the sort of in-person politicking has always been a preference of his. They want to be talking about these. The White House believes that it's on a winning streak right now, and that they have a message to share, not only to their base to say, hey, we're delivering on the stuff we told you we would, but also to the broader electorate. And we'll see if it shows up in these poll numbers. But yeah, they're on a winning streak right now. They want to talk about these things. And once these bills sort of get through and, they clear the decks on a couple of other things, I think then one question to watch for is, will we get any more Tom Tillises? Will we get anyone that is like, has been a team player until now, but maybe now starts to come forward with stuff that they're not jazzed about, as Senator Tillis has. Of course, he's not seeking re-election, so the threat of a primary challenge is going away. So we'll see. But right now, Trump loves to complain that Republicans aren't marching in lockstep. They've been getting stuff done in the last month or so they have been in pretty lockstep recently.
Against what some would have described as long odds. They have been able to do so.
Narrow majorities in the House, for sure.
Bloomberg senior White House reporter, thank you so much. And as we consider that crypto bill, especially in the moment it marks for an industry that has been lobbying hard here in Washington for years now for something like this to materialize, Tyler, it's also worth pointing out that they have a lot of money powering them too. And they are a force as we look ahead to the midterms in 2026. They're likely to be spending money like we saw in 2024.
Exactly. And we've already seen figures from Fair Shake, for example, one of the super PACs, and its affiliated PACs that has an enormous amount of cash on hand already, because even though it feels like we already just got through an election here in Washington, we're already preparing for 2026. And when you do look at how slim the majorities are in both chambers, this is a political faction, a pile of money that lawmakers on both sides of the aisle are going to try to capitalize on.
Well, yeah, that's absolutely true. And perhaps that's why lawmakers are putting more focus on actually getting this legislation across, despite what at least some Democrats have suggested are ethics concerns around the way in which legislation like this could actually serve to benefit President Trump and his wider family. Those ethics questions, I'm sure, will have to wait for another day. I wouldn't imagine President Trump is going to address them at the signing ceremony later on today. But we want to talk more about this legislation with a member now of the House Financial Services Committee, who is here with us in our Washington, D.C. studio on this Friday, Republican Congressman Bill Huizenga, representing Michigan's 4th District. Welcome back to Bloomberg TV and Radio, Congressman. Nice to see you in person.
Good to be with you, yeah.
As well. It's been a big week in your chamber. It's going to be a big day.
Yeah, this week has
at
been
the
a
White
hell
House.
of a month, I tell you.
Yeah, maybe it should have been reframed as crypto marathon rather than crypto week.
It was something else. But, you know, look, a lot of us have been involved in this for a very long time. And I understand that this might be hitting some of our colleagues a little fresher than certainly what those of us who have been diving into this for a number of years have been having to wrestle with. But, you know, this is an important, I think, an important statement for us with the Genius Act. Was it my first choice? No, the House was my first choice, the House version of that, but very satisfied with where we ended up on Genius. And, you know, my family's involved in construction back in Michigan, and we build houses. And the first thing you do is you pour the walls and the footings. You know, that's the foundation, literally, and then you go from there. And I think that's what we're going to be working on next.
Well, to build off of this, we're talking about the Genius Act.
Unintended on the build off of it.
Well, you're talking about the Genius Act and perhaps some of the changes that you didn't want to see made. But let's talk also about the Clarity Act, because now that heads to the Senate. What's your message to colleagues in that chamber when it comes to keeping that legislation perhaps as it is?
Yeah, well, we think it's a good product. We certainly wouldn't have put it forward if we didn't. And again, a lot of time and effort has been put into this. And I get it. There's a lot of folks that are getting educated at a level that they necessarily hadn't been at previously. And I'm not saying that about Senate banking or anything like that. I'm talking about general colleagues that have to then go out and vote for these things. But we think it's a very good, solid product that Chairman Hill and Stile and a number of us and others, Barr, that have been working on this, Warren Davidson. These are folks that have been really doing the heavy lifting over a number of years. And then obviously over on the Senate side, we have colleagues that have done that as well. And so hopefully we're going to be able to come together. I hope that they lightly edit the House version of that. But yeah, it is essential, though, that we not stop. And it's key that we keep moving forward with this because we have to add the infrastructure, the plumbing on all of this.
Well, and of course, the Clarity Act is supposed to divvy up authority between the SEC and the CFTC. Yeah. And the new SEC chair, Paul Atkins, actually joined our colleagues on Bloomberg Surveillance earlier today talking about how he's viewing this specifically. This is what he said.
We are out to, obviously change direction at the SEC, and I think we've already done that. We're moving away from regulation through enforcement and uncertainty in the markets, especially with respect to cryptocurrencies and digital assets in general. And we're looking to set firm, clear rules of the road for people who are operating in that environment.
I wonder about the sense of urgency here, knowing that the SEC now is far less adversarial, shall we say, to this industry. Is there as much urgency in trying to make sure that the CFTC gets more authority over these assets?
Well, look, you got to go back and look at what had happened previously under Gary Gensler, right? And of course, when he was head of the CFTC, everything was a commodity. And when he became head of the SEC, everything magically became a security. And the simple truth is that these things are not either fish or fowl. I always say it's a platypus. It's got characteristics of both in many ways. And it's up to Paul Atkins, as well as the legislation that we're passing, to compel them to come up with what those rules of the road are. And what we saw in the last administration was basically Chair Gensler just making it up as he was going along. And that's not acceptable because it doesn't give predictability. It doesn't give surety of a direction. And I've got great confidence in Paul Atkins and in what he's going to be doing on that. But again, we can't just sit back and say, okay, we declare victory. We don't have to do anything more. This is really just that first step.
I want to drill down a little bit on the bill that we're seeing signed into law today. When it comes to the Genius Act, stable coins, we have this great story out on the terminal today from actually our colleagues at Bloomberg Government that says that everyone's going to rush to register But the thing is, when it comes to the OCC, the comptroller of the currency, where everyone's going to be going, they're facing actually a shrinking workforce. There are DOGE cuts that have hit the agency. Do you think that there is bandwidth among our regulators to meet what is expected to be this surge in demand?
Yeah, in general, I do. I think that the regulators have to make sure they are prioritizing what their actions are as well. That would be the argument many of us have had over the last 4 years. We wandered far afield from where those regulators should be. And they were into whether it was ESG and into all kinds of other things that were not necessarily about materiality. They weren't necessarily about safety and soundness and consumer protection. And so, again, I think if they focus in, we're going to be fine on them being able to do that. Is there going to be this bump coming in? Of course. I mean, there's a lot of pent-up demand, and frankly, not many people bought the idea of just come in and register over the last 4 years, and all will be fine. I mean, that they didn't buy that, so there's a lot of people that were holding back, waiting for this moment so that we could get that clarity. And this is good for the U.S. dollar. It's good for our preeminence in the world. It adds to the safety and soundness of not just our currency and our money, but for those that are doing the investing. It makes it, not frictionless, but less friction in transactions. So I think this is going to be good for the economy as well.
Well, when we consider the safety and soundness and the credibility of the U.S. economy, monetary policy and its credibility also plays a role there. And I ask you this as the vice chair of the House Financial Services Committee. It's one thing for President Trump to suggest he'd like to see lower interest rates. It's another for administration officials to actively be pushing for the chair of the Federal Reserve to resign, suggesting he should be investigated for fraud. Do you see risk here of doing what could be permanent damage to the Fed's independence and therefore credibility by extension?
Well, I believe in an independent Fed that is important now. As Chair Hill yesterday, when he was asked about this in a press conference, started
None of
going.
you can avoid it, can you?
Well, he started going through the litany of what was going on with LBJ and with Richard Nixon and Ronald Reagan and others. Jimmy Carter. I mean, there's been plenty of pressure that has been applied to the Fed and Fed chairs and Fed officials over the decades. And because they are independent doesn't mean that they are somehow absent of any criticism or absent of any critique. And, I think as we've seen a few folks sort of breathlessly say, the Fed chair is going to get fired, the president's going to do this. He himself addressed that, walked that back to add clarity to make sure that wasn't happening. And look, his term is going to be up soon. That's going to be the opportunity in my mind where the president's going to be able to really assert himself. Now, does it mean that he needs to do a better job? Yes.
All right, we'll leave it there. Congressman, thank you so much for joining us. The Vice Chair of the House Financial Services Committee, Congressman representing Michigan's 4th District, Bill Huizenga, here with us in studio on Balance of Power, live from Washington, D.C. I'm Kaylee Lyons alongside Tyler Kendall, and we'll have more straight ahead here on this Friday edition, so stick with us on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ continuing to remain in the red. Stocks had been fluctuating as traders sift through a handful of earnings reports, but right now in the red. S&P holding close to session lows, down 8 right now. That is a drop of just about 0.1%. So the S&P at 62.88, retreating from a record. The Dow down 239, down 0.5%, and NASDAQ lower now by 10 points for NASDAQ. The composite index down 0.1%. NASDAQ 100 index down 0.2%. However, our Mag 7 index is advancing by 0.5%. The 10-year 4.41%. Bond yields falling alongside the dollar as Fed Governor Chris Waller reiterates his case for a July rate cut. That coming in an interview with Bloomberg. The 2-year 3.86.